Good morning, friends, and I'm very happy to welcome you for the second day of this Mega Bank Audit Training Program. Today, I'm going to start with NPA, that is with reference to IRAC, NPA Asset Income Recognition Asset Classification. I'm going to start with the basic, from the basic what I planned. Presume that you don't know anything about NPA. There are seniors who are well versed in NPA, but anyhow, I'm going to start from zero so that slowly I'll increase and slowly I increase my speed and slowly increase the subject. Thing is, you must have a scribbling note and a pen so that you can easily calculate, you can easily understand. And with this opening introduction, I want to start the presentation of today. What is the NPA expansion? One is correct. NPA expansion is non-performing advances, non-performing auditor, non-performing assets, non-performing accounts. Which one is correct? You can put it in the chat box. You can put it in the chat box. Which one is correct? Jayabalan sir put non-performing assets. What about B, sir? Which one is correct? Non-performing advances, non-performing auditor, non-performing assets, and non-performing accounts. It is C, non-performing. Shamugesha? So this is a confusion. Yeah, but this were correct. And actually, Shamugesha is this is non-performing assets. It is non-performing assets. So meeting started, sir. So meeting started. Okay. Sharma sir, this is C, non-performing assets. If you fail to identify the NPA correctly, then you'll be called as B. That is non-performing auditor. So with the opening remarks, I want to start the thing is wrong classification or non-classification of NPA, wrong classification or non-classification of NPA, you will definitely get notice from RBI. Almost, I heard that almost 27 auditors, according to me, they've already received notice from the Reserve Bank of India why you are not correctly classified as NPA. Why you are omitted to classify one account as NPA. This is a notice they have already, the charter accounts already started to receive. So you have to be very careful with reference to NPA classification. This is what I want to tell you. Next one is the portion of coverage. Today I have planned to cover the following portions. One is non-agricultural advances and agricultural advances and NPA techniques, how to identify the NPA and NPA pressure, how to handle the pressure, NPA pressure given by the bank officials, and what is the NPA game. So NPA game is nothing but the technique adopted by the bankers to hide the eyes of the signature, eyes of the charter accountant to get the signature. Techniques adopted by the bank officials to hide the eyes of the charter accountants to get the signature. There are various techniques I have noted in the NPA games. This I will share whenever I present the subject. So I am going to start with the non-agricultural advances and agricultural advances. In non-agricultural advances, it is term loan and CC. With reference to agricultural advances, direct advances and indirect advances. And apart from that, what other techniques are adopted that we are going to have discussion today. And this is the basic circular now. The RBI has issued the circular dated 1/4/2022. This is a master circular based on which you have to do the audit. Yesterday itself, I have shared this circulars to you. I think you would have received in your mail. This almost contains some 77 or 87 pages. This, based on this, you have to do it. So actually, this is a base circular. Hereafter, for the year ending 31/3/23, you have to do the NPA working based on this master circular. So after completion of this presentation, and if you go through the circular, you'll be very easily understand, you will definitely easily understand all the provisions. Next thing is There is another circular called 110/2021. This is a master. This is also another master circular. Initially, they have issued a master circular on 17/2015, and subsequently they have issued uh, by compiling all the provisions, all the clarifications, and they have issued 110/2021 circular. For 110/2021 circular, they have issued two clarification circular, one in the month of November, one in the month of February. So then they compiled all the four circulars. They have issued one master circular dated 1/4/2022. Here, the important point for this is an asset, including lease asset, becomes non-performing when it ceases to generate income, and it ceases to generate income to the bank. So that means an asset, if it becomes, it is not possible to generate any income to the bank, then that will be called as NPA. Here, asset includes lease asset and ceases to generate income, then it becomes NPA, and no further interest has to be paid after the account has become, and you have to bear in mind. So NPA means if you identify one account as NPA, further interest should not be charged. That is the basic point that you have to remember. Next one is, this is the four circulars that I already said. And here you have to see the word overdue for a period of more than 90 days. Overdue for the period of 90 days, out of order, and they use the word out of order for CC. That is, it's clear that for term loan, they are using the word overdue. For CC, they are using the word out of order. Here they use the word more than 90 days. Here they use the word more than 90 days. The thing is, this more than 90 days is very, very important, as well as point number point number 4, it says that with reference to short-term crop, it remains overdue for more than 2 crop season. For long-term crop, it is 1 crop season. And this is a basic thing that you have to know about this base points. One is more than 90 days. Term loan, they are using the word overdue. For CC, they are using the word out of order. And for agricultural advances, they are divided into 2 parts. For short term, they are using the word more than 2 crop season, overdue for more than 2 crop season. And for long term, it is overdue for 1 season. So everything we'll see later on the next part of the presentation. Here, you go to the last point, 12/11/21, it says, in case of interest payment in respect of term loan, an account will be classified as NPA if the interest applied is applied on the specified days overdue for more than 90 days. So here, the interest is applied on term loan. If that interest is not serviced for more than 90 days, then that account will be termed as NPA. So this is a basic thing. And go to the first point. In case of interest payment, the bank should classify an account as NPA if only if the interest is due and charged and during any quarter and is not serviced within 90 days from the end of the quarter. Here, the point is, in case of holiday period, in case of holiday period loans, the interest is due. Interest is due and not paid. Interest is due, charged, and not paid. So that means if that is the case, you have to calculate the 90 days from the end of the quarter. This is with reference to holiday period interest. This also I will explain in detail in other part of my presentation. This is a content that I have taken from the RBI circular. Caution. This is a caution that you have to remember while identifying one account as NPA. Is identification. Initially, I said at the opening remarks that any wrong classification or non-classification of NPA, then the auditor is self-responsible and RBI will definitely send notice to the chartered accountant. This is a caution I want to make to you. Jitendra, I think you said there is no audio. Am I audible, sir? Jitendra, sir? Am I audible, sir, now? Yes. Yes, sir. Jitendra, sir, I'm audible to friends. Jayendra Patel, sir. Am I audible, sir, now? Okay, sir is not on the line. Okay. Uh, uh, okay. Jayendra, sir, am I audible now? So identification means you have to identify the NPA correctly. Otherwise, you will not be getting any you'll not be getting any, you'll be definitely getting notice from the Reserve Bank of India. Even once I have received notice from Reserve Bank of India, see, in one of the account, it's a SPOD, it's a savings account OD, and it has not been paid for more than 90 days. So as on 31/3/20, the account has not been paid. But I have not classified as NPA since the amount, the SB account is being closed on 4th of April of the following month. So what I gave in my audit report in LFAR and the main report, I say that though the account has become NPA on 31/3/20, and since the account has already been closed, there is no need to make the provision. So I have considered events occurring after the data balance sheet. For others, the RBI has subjected and they issued the notice. Then I have sent the clarification for this. Then they accepted. So this is what we have to see. Identification of NPA is very, very important. And next point is fraud. Next point is fraud. So this is also another important point, and this we have to see in the afternoon. That is how to identify the fraud. We'll see in the afternoon. Any fraud is undetected during the course of audit. If any fraud is undetected during the course of audit, then the auditor is held personally responsible for the loss to the bank, apart from losing our certificate, facing insured action, then facing court action. So the main thing is you have to identify the fraud. If you fail to identify, then your personal property will be attached. That means you will be made as a party to the agreement. This is a very, very dangerous thing. So this point you have to remember. If any fraud is undetected during audit, then you will be held responsible. So that is why you have to identify the fraud correctly. If there is any fraud, you have to identify the fraud correctly. And third one is MSME, that is post-COVID. Post-COVID, there is an increase of gross NPA. That is after post-COVID, because during COVID, the bankers they have given a lot of benefits to the MSME units, but in spite of the benefits, they are not able to make the production. They are not able to sell it. If they sell it on credit, and they are not able to make the recovery. And when they are not able to make the recovery, they are not able to repay the loan. If they are not able to repay the loan, they become the NPA. So post-COVID, lot of MSME units have failed. So this is the effect of COVID. This also industry, though the government is giving support, it is the people who are running the industry, they have to plan their business accordingly. Next point is, this is a very, very important thing. Bank sells NPA to ARC, asset reconstruction companies. The World Bank says that your NPA level, the bank is more, so they hesitate to lend the money to the bankers. What they said, okay, we will clean the bank's balance sheet by way of selling or transferring the NPA to asset reconstruction companies. Thereby, the reduced NPA. This is the latest thing, and you can find a lot of information from the media. When they sell the NPA to ARC at the rate of, say, sometimes they are selling at the rate of 35% or 40%, and the collection is the profit of ARC. And sometimes due to the heavy value of a huge value of the property also, people they hesitate to buy the property because everything you have to pay in weight amount. Everything that you have to pay in weight amount, and people they have to arrange the money in because they have to prove the source. So this also delays the recovery proceedings. So here the concept is the bank sells the NPA, bank sells the NPA to ARC. This is a concept that you can go and see in almost all the newspapers, say Economic Times, Business Line. You can almost daily you are getting the news about the ARC, Asset Reconstruction Company, and even you'll also be getting the audit of ARC. And also, this is also another important area. So, and now I'm coming to the very important area. Jitendra, are you able to hear now? Jitendra, sir, you said no
Yes, sir.
audio.
It's fine, sir.
Okay, thank you. And it's a special mention account. Special mention account. So this work now from year 2021, I think it's from year 2021. Every chartered accountant has to give a specific report about this SMA, special mention account. This will be given in addition to NPA. In addition to NPA, you will not be paid any fees. And few bankers now they they requested you to give MOC for memorandum of changes for the special mention account. This is the effect that this is a very, very important thing that you must understand. And here, this exercise you have to do before that account has become NPA. Before an account has become NPA, suppose a loan is there, it is due, it has not paid. So from the date of due up to 90 days, it will be, everything will be coming under the category of SMA, special. So only after 90th day or 91st day, that account will become NPA. So this is an exercise you have to do before one account has become NPA. And account has come into this SMA category, then the bankers definitely they started to close follow-up, because it is going to be a stress asset soon if it is not, the payment has not come. So this is a very, very important thing. So everyone say that the system takes care of everything. Okay, they can manipulate anything in the system. So don't worry at all. First thing, you have to identify the due date. Then from there, whether the classification of SMA is correct or not, that you have to do. Yeah, one account has become NPA only after SMA2. Here, that account has will become NPA only after SMA2. Here, you have to remember the SMA. SMA means a special mention account. SMA 0, 1, 2. It is not SMA 1, 2, 3. It is SMA 0, 1. So SMA 0 starts from 1 to 30 days. From 1 to 30 days. And it is applicable only for the term loan and not for CC. So that means when you arrive at the SMA 0, don't worry about CC. You have to calculate only for the term loan and not for CC. SMA 1 starts from 31 to 60 days. And SMA 2 starts from SMA 61 to 90 days. So for both SMA 1 and 2, term loan and CC are applicable. But for SMA 0, only term loan is applicable. It is an exercise before NPA, and SMA 0, 1, 2 that you have to remember. SMA 0 is applicable only for term loan and not for CC. This is the highlight of special mention account. Now, this is a circular, this is a clarification circular that you have to see. It's a clarification circular that you have to see. It's a very, very, very important circular. Clarification circular they have issued on 12/11/21. This they have issued on 12/11. So just go through if the due date of the loan, if the due date of the loan is 31st March 21 and full dues are not received, means what is the amount due that is on 31st March has not been received. And if the lending institution runs the day-in process and they say that the data overdue shall be 31st March of 21. This is a very, very important thing. This is the data overdue is 31st March of 21. That means today it is due, it is not paid. So you have to start the overdue date from today. So that means the overdue has to be calculated from the due date. From the due date, you have to calculate the overdue date. So, but the circular says it is more than 90 days, overdue for more than 90 days. So to calculate that 90 days, that 90 days, you have to calculate the overdue from the due date. For this, I will definitely give an example. It is there. So this is a very, very important point that you have to remember. So here you have to calculate the SMA from the due date. So let us go to the chart and let us take 31/3/21. In case 31/3/21 is the due date, so SMA starting date is 31/3/21 because the circular dated 12/11/21 it says The circular dated 12/11/21, it says the due has to be calculated from the due date. So 31/3/21, that is 1 day, and 29 days in April. So that is the SMA 0 period starts from 31/21 to 29 April 21. This is SMA 0. Is it clear, sir? Is it clear? SMA 0 starts from the due date. Starts from the due date. So 31/3/21 to 29th April. That is where the 30 days ends. So that is SMA 0. And SMA 1 starts from 31 to another 60 days. So it ends on 29th May. And SMA 2 starts from 35/21 to 28th June. Then that account will become NPA on 29/6/21. So just view this, and if you understand, then only I'll go to the next slide, because this is a basic point. Then only easily identify one account as NPA. 31/3/21 is the due date. As per the 12/11/21 circular, the overdue starts from, it starts from the due date. It is from the due date you have to calculate the overdue. So overdue date is 31/3/21. The amount has not been paid. So 31/3/21 add 30 days. So 31/3/21 1 day. Remaining days of April is 29. So 29/3/21 is the SMA 0 period. SMA 1 period is 34/21 to 29th May. And SMA 2 period is 35/21 to 28th June. Then, if the due has not been paid, that is the due amount of 31/3/21 has not been paid on or before 28th June, then that account will become NPA on 29/6/21. Is it clear, sir? Then I'll proceed. If you are clear and if you got any doubt, you are welcome, sir. You can ask me. Because I'm just taking some gap, because you must go through this chart. Can I move to the next chart, sir? Is it clear for you? Can I move, sir? Sir, is it okay? Why I haven't received any reply, I don't know. No? Oh, I'm moving to the. Okay, yes, sir. Jabalan sir, okay, and can unmute. I think you only said other friends, because this is a basic, very basic thing, very basic thing. You must understand this. You must understand this. Okay, I'm moving to the next. I'm moving to the next slide. How to calculate the 90 days? This is also another very important exercise, because they say that you have to take the 90 days. Here, let us take the due date of the loan is 5/4/99. 5/4/2019. How to arrive at 90 days? This is very important. So 5/4/19 1 day. The remaining days of April is 25. 35 days in May, June 30, and July 3, where the 90 days ends. That is, if any loan is due on 5/4/19, the 90th day, it ends on 3/7/2019. In the previous slide, we have seen SMA 0, 1, 2, how to calculate 30 days, 30 days, 30 days. Here you have to combine everything, and you have to arrive at the 90th day. 5/4/19, the 90th day comes on 3/7/2019. So the NPA due date is 4/7/2019. Is it clear, sir? Because you have to understand this. Here I am going to talk about only the non-agricultural advances. I am not touching the cash credit loan. I am not touching the agricultural advances. I am just touching how to calculate the 90 days for the non-agricultural advances. So because the circular said it is more than 90 days. So 5/4/19 is the due date and 37/19 is the 90th day. If the amount which is due on 5/4/19 has not been paid on or before 3/7/19, then that account will become NPA on 4/7/19. Any doubt you can ask, because slowly I'm going, because after this we'll go fast. So this is a base chart. You must understand this. Let us take 16/6/19. 16/6/19. The 90th day falls on 39/19. So 16/6. So one day in 16th one, and remaining days of June is 14, and July 31, August 31, 13th September. So 13th September is the 90th day. And if the due amount of 16/6/19 has not been paid on or before 13/9/19, then that account will become NPA on 14/9/19. Any doubt for this, sir? Because this is a basic thing. This is a basic thing. Then how to arrive at the 90th day, 90 days. This is also a very basic exercise. Is it clear, friends? One is SMA we have seen. And next one is calculation of 90 days. Does 90 days include, say, Sarvan sir, there is no holiday period for the NPA norms. You need not consider whether it's a holiday period or not. The thing is, you have to identify the 91st day. That's all, 90th day. Holiday period will not be forming part of the, you do not exclude the holiday periods in the NPA. It's a very good question, but the circular, in that circular, they say that you need not consider about the holiday period, I mean national holidays. So, is it clear, sir? Is it clear? This calculation is clear so that I can move to the next point. Yeah, thank you, sir. Clear now. Thank you, Saranam sir. So I'm moving to the next slide. And if you got any doubt, you are welcome, sir. Don't hesitate at any time. You are welcome. This I'll skip. And here, this is nothing. I'll tell. So in accounts, what we do total debtors, less bad debts, less reserve for doubtful debts. Remaining amount is called as good debts. Total debtors, less reserve for doubtful debts. Remaining amount is called as good debts. Here it is ulta. This good debt is called as standard. Good debts is called as standard. It is permanent. That means the dues are paid in time as per the sanction letter. For the sanction letter, all the dues have been paid. And the reserve for doubtful debts have been bifurcated into 4 parts. One is substandard, then doubtful 1, doubtful 2, then doubtful 3. Substandard, D1, D2, D3. Here, if you identify one account as NPA, it will remain in the category of substandard from the date of NPA to 12 months. And from the end of substandard, then for 1 year, it will remain in the category of doubtful 1. That is for 1 year. And at the end of the doubtful 1 period, for the next 2 years, that will remain under the category of D2. That is for 2 years. If it goes beyond 2 years, then more than 3 years, then that will remain under the category of D3. That is doubtful year, doubtful 3. That is more than 3 years. It comes under the category of D3. And if we are not able to recover the amount from the borrower, then that will be classified as loss asset. This is a very, very important chart that you have to remember. So standard, substandard, D1, D2, D3, last asset. Here, one has to see in substandard, you see there they mention the word 12 months. And against D1, they mention the word 1 year. What is the difference between 12 months and 1 year? What is the difference between 12 months and 1 year? You can tell. 1 month, here they say that it is 12 months in substandard. Doubtful, it is 1 year. What is the difference? I can tell in case of if any NPA comes on the leap year, that is on say 29 to 2020. If we add 1 year, it comes to 29 to 2021. There is no date of 29 to 21. So only for substandard, to avoid that, they have used the word months, 12 months. But remaining period, they use the word 1 year, 2 years, 3 years, more than 3 years. So this is a basic difference between 12 months and 1 year. So once again, repeat, a good debt is called a standard, and doubtful debts have been classified into 4 parts: substandard for 12 months, D1 for 1 year, D2 for 2 years. And if it crossed more than 3 years, then that will be classified under the category of doubtful 3. Then if they are not able to recover the money, then they will be forming part of, they will be included in the loss asset. Is it clear, sir? I think we can use our chat box. So because if you follow the presentation, because today presentation, morning presentation is very important. Because if you have failed to identify, then you are facing a lot of problems. So please concentrate so that if you have got any doubt, you are welcome. So I'm moving to the next slide. This is basically it's a very important slide. It's a very important slide. And let us take the due date at 31/12/22. 12/22, you add 90 days, where the 90 days ends. So it ends on 33/23. The loan amount is due, principal is due on 31/12/22. When you add the 90 days, it ends on 33/23. It ends on 33/23. Then 91st day is called as NPA. So 33/23, and if the amount which is due on 31/12/22 has not been paid on or before 33/23, then that account will become NPA on 31/3/23. That is before the end of the financial year. And in case if the loan amount is due on or on 1/1/23, the 90 days ends on 31/3/23, and the 91st day goes to the next financial year. So you need not bother. The logic is, if any loan is due or sanctioned on or after 1/1/23, you need not bother. All account will be treated as standard only. So this is applicable for the non-leap year. This is applicable for the non-leap year. So 31, so that means all the dues up to 31/12/22 has to be paid on or before 31/3/23. Otherwise, that account will be termed as NPA. The logic is NPA cutoff date, we have to take it as 1/1/23. This is a very important point. NPA cutoff date is 1/1/23. From that means any loan due or sanctioned on or after 1/1/23, you need not bother. Everything will be termed as NPA. That is why we have to consider 2 days. One is 31/12/22. You have to calculate all the dues, and the loans due or sanctioned on or 1/1/23, you need not bother. So the NPA cutoff date for the non-leap year is 1/1/23. In case of leap year, you have to add 1 day. So 2/1/23. You have to calculate from the 2/1/23. Now we don't want to, we need not confuse. So for the non-leap year, the NPA cutoff date is 1/1/23. So now you have to understand this. Now I have taken SMA, then how to calculate 90 days. Now I am coming for the NPA cutoff date. Is it clear, sir? Because this is a base based on which we have to do the entire NPA working. And if you are clear, you can put it in the chat box. Or even you can unmute and you can tell. NPA cutoff date is 1/1/23. If I got any doubt, please put it in the chat box. Please put it in the, because I am receiving message only from Jayapal sir and Saravanan sir and other friends. Please confirm this at in the chat box. Yeah, Jitendra Patel sir, super. So very basic, very basic. We have to be strong. Because when you go to the bank, and definitely you will get a lot of doubts. And Badish, yes, thank you, Badish. Shamkesh sir, thank you. Okay, I'm moving to the next slide. So here, SMA 0, SMA 1, SMA 2. Then how to calculate 90 days and NPA cutoff date. So here, this slide is very much important because the date 31/12/22 for you have to calculate all the dues only up to 31/12/22. Then 1/1/23, you need not bother. After the loan which is due on 1/1/23, you need not bother. Everything will be treated as standard. But as an auditor, you have to verify all the loans, even though that has been sanctioned on or after 1/1/23. Only for the NPA working, this is the base. But for the verification of documents, advances, you have to do everything. Next slide. So this is a chart you have to go through. Substandard. 12 months from the NPA, 1 year from substandard, 1 year from D1, and 1 year from D2. It is 2 years from D2. It is not 1 year. It is 2 years from the D2. This is a chart you have to remember. So 12 months from NPA, 1 year from substandard, 2 years from D1, and more than 3 years it comes under the category of D3. So 5/12, in case if the NPA date is 5/12/21, it remains up to 4/12/22 because if it goes to 5/12/22, that means it is coming under the category of D1 and 2 years under the category of D2. So 5/12/23 to 4/12/25 and after 5/12/25 it remains permanent. It is not 5/12/24, it is 5/12/25. It remains permanently. Now I am moving to the next part of the slide, and here this word I already said, that is you have to use the word term loan overdue and for out of order for CC account. So this term you have to remember. And use of the term here, these are two important things that you have to remember. Downgrade the account and upgrade the account. You have to downgrade the account gradually. Is one account has become NPA, then from standard to substandard, then substandard to doubtful 1, then doubtful 1 to doubtful 2, doubtful 3, then more than 3 years. You have to downgrade the account gradually. Every year you have to do it. So, in case if you want to upgrade the account, in case the overdue amount is 3 lakhs, if the party has paid only 2 lakhs, so can we upgrade? say from D3 to D2 or D3 to D1. No, it is not the case. When you want to upgrade the account, you have to upgrade only to standard and not to any other status. So the status may be substandard D1, D2, D3. When you want to upgrade the account to when you want to upgrade, you have to upgrade only to standard. That means the party borrower has to pay all the dues as on date. All the dues as on date. He has to pay all the dues. So even a portion of the amount they paid, it will not be upgraded. So the party has to pay not only the irregular portion, all the dues he has to pay up to the date. So this is a very good, very important thing that you have to remember. So upgrading to the standard means you have to upgrade only to the standard and not from D3 to D2, D2 to D1. So downgrading you can do it gradually, but for upgradation you have to go for every step you have to do it. Here, I have got a very good case study. I'll tell. This will be useful. Here, how to face the how to face the NPA pressure, that I'll tell later. But here, in one of the cases, I noticed that I have identified something around 34 crores in NPA in one of the branches. And even I want to tell, I'll start from the basic, because one of my friend who is from Salem, has gone to Trichy branch. One of the national banks, he has gone to the Trichy branch. I have gone to Pudukkottai branch. Of the same bank. There, my friend, he has identified. He's my friend and is my junior. He identified 4 crores as NPA in that particular branch. Then after that, the manager started to have discussion with the with my friend, and he was not able to convince my friend. Then what he did? The information is being passed on to the regional office, and one officer from the regional office, divisional manager, he came to the branch of Trichy, and he started to slowly started to have discussion with my friend. So one thing you have to remember, you are not responsible. You need not to speak to anyone. You are not responsible to give any reply to anyone. So you may clarify only the branch manager and nobody else, because you have been appointed by the central auditor, by the head office and not by the regional office. But the regional office, in order to avoid NPA, what they do, they'll come to the branch, they give lot of pressure. Here, my friend was threatened by saying that next year you will not be getting the audit. Even I can refer your name to the disciplinary committee. This and that, he started to threaten the young charter accountant. Then out of frustration, what he did, he has yielded to the pressure given by the divisional manager. He has removed all the NPAs from the MOC, memorandum of changes, and he has put everything in the LFAR, and he has forgotten to put the same thing in the main report. So he has given everything in the LFAR. The LFAR, the people, they will take only in the month of December. So if there is any NPA, you have to identify and you have to put everything in the MOC. Next thing, then that officer said that I'll say that there is one auditor who is at Pudukkottai. Same thing he started, because he didn't know that my friend is he is known to me. Then he started to threaten and say that I am going to going to the Pudukkottai. I see that auditor, I am going to remove that NPA. He has identified something around 38 crores. It is me. So, okay, let him come. Then he has given the information. My friend has already called me and has given the information that he is coming to your branch to threaten you. He said, okay, let him come. And I told only one thing to the my friend. Why you yield to the pressure? You have to save your skin. Nobody will remove you from the audit. Even if it is not audit, don't worry at all. There are a lot of sources from where we can earn. Then after that, that man has come to the Pudukkottai branch. He has directly gone to the manager. And in that, the manager has showed that I am sitting there in the cabin. And here, before going to the next step, I'll tell one of the NPA game. What is the NPA game? I'll tell one of the techniques that they have adopted in the NPA is they have changed the due date. They have changed the current year due date to next year. what the manager, they say that, sir, NPA is being taken care of by the system. NPA is being taken care of by the system. They change the entire due date of for this financial year to the next financial year. The system always what it does, it puts only standard. All the accounts have been put as standard. So I have identified this type of alteration. That is, they did every alteration in the master records. So any tampering of, that is, they have tampered the master record. So then I asked the manager, sir, who has changed the data? The manager said, I don't know. Then even called the regional office and they say also said, sir, we don't know. So nobody knows who has changed the master record. So then I said, okay, it amounts to tampering of the record. It amounts to tampering of the record. And this tampering of record, it amounts to fraud because without any evidence, they have changed it, they have altered they cancelled the data. So it is a tampering of records amount to fraud. Next thing is this I discussed with the manager and I already told him, sir, I am going to classify your entire branch advanced transaction under the fraud. You have tampered the master records. Then he got, his BPS raised like anything. And that is not our headache. So it is our finding. One. Then after that, this man, this division manager has gone to the manager and asked him to come and meet me along because he wants to come. He requested the manager to come along with him. He said, no, I will not come. He has already classified my branch as fraud. So I am afraid to come and meet the CA. He said, if you want, you go and do it. I will not come. Then this person has come. And before that, what I made a request to the security officer that there is a security guard. And I asked him to stand in front of my cabin. And I already requested him not to allow anyone inside the cabin without my permission. Then here, what he did, that division manager has come. Since the security guard knew that the division manager, he kept quiet. He allowed the he allowed the division manager to enter into my audit cabin. Then he said, sir, may I come in? I said, no, it's an auditor cabin, sir. Please go and see the officers are there. You can go and do the duty. No, sir. I want to come here only to meet you. Then I changed my voice. Who are you? Why I raised this voice? Because he has threatened my junior. He has threatened my friend. He's a fellow chartered accountant. Who is he to threaten the chartered accountant? Then I said, who are you? Sir, I am coming from the division office. So what? Sir, you have classified the account as 38 crores as NPA. So what? So this is a reply I give. No, sir, you are not supposed to do it. Okay, whatever you want to say, you put everything in writing. You write your name, staff number, address, designation, the permission given by the regional manager to come and meet me. Everything you have to give it in writing. And for what, why you say that it is NPA, that also you have to give it in writing. And I have got I need not give any reply to your question because you are coming from the regional office. I have been appointed by the head office. And whatever you say, you have to put everything in writing. You have to hand over the letter to the branch manager, and the branch manager has to hand over the letter only to me. And you are not supposed to enter into the cabin. This is the situation that I handled. Then he got said, no, I will not give anything. Then I asked the security guard, sir, this person is disturbing me in the audit. You ask him to go away. Then he pulled the shirt of that division manager. He throw him away. Then I never allowed him to speak because who is you to threaten the charter about it? It's only an officer. It's only an officer. Then after that, he was not able to convince me. Then he has called the Salem regional office and everybody said, no, I will not talk to Ravindran. I will not talk to Ravindran. Then after that, he left the branch. The next day morning, divisional manager, that is regional manager and the division, that is from the zonal manager, both of them have come to the branch because it is the NPA is 38 crores because I don't want to change it. Then he came to the cabin along with the manager. Then they made a request, sir, can you remove one account is 18 crores, sir. Please remove that 18 crores account. Then I told him one thing. Okay, sir, I will remove it, provided the party has to come and remit. That is, and now I am touching the word of application. The party has to remit 1.80 crores into the account. Up to date. That is dues up to date. He has to remit 1.80 crores. Then only I will consider to remove that from the NPA because I can upgrade. But the party has to pay 1.80 crores. The question is, Can we allow the upgradation after the balance sheet? Yes, we can consider events occurring after the date of balance sheet, but this thing you have to cover in a specialized note in the LFAR as well as in the main report. You have to record the proceedings. Then you need not give the MOC because all the dues have been paid before you complete the balance sheet. Here the party has paid, if the party has paid 1.80 crores, then I will consider. Then this regional manager and zonal manager, they've gone and they call the party and they say that, sir, if the party has remitted 1.80 crores, can you leave that from the NPA? I said, yes, I will consider, no problem. Then what has happened? What has happened means, yeah, that happened on Thursday. So that's a Good Friday. Next day is Good Friday. Saturday I have not gone. Then Sunday is a holiday. Monday also I have not gone. I told the regional manager and zonal manager, sir, I will come on Tuesday, sir. On Tuesday, I will come and finalize. And before that, you please ask the party to remit 1.80 crores into the. Then suddenly on Saturday, I got a phone call from regional manager, zonal manager, and branch manager say that the party has come and remitted the money. Sir, don't classify that account as NPA. I said, okay, sir, I will not classify that account as NPA. I will come and verify those accounts, then I will do it. Then after some time, after that is, I went to the branch on Tuesday and I saw the loan account. I saw the loan account. No credit has come into the account. No credit has come into the loan account. It's a term loan. It's a term loan account. No credit has come into the loan account. Then I called the zonal manager and regional manager, told them, sir, you have bluffed. You have bluffed. You have given a wrong advice. You have given a wrong information to avoid NPA. And I think you are not fit for the post. That to the tester also I said, because why you bluffed? No money has come into the loan account, and you say that money has come into the bank. Then both the regional manager and the divisional manager, zonal manager, they were got annoyed. They are annoyed, and they looked into the loan account from their end. From their end, they look. Then they found that no credit has come in the loan account. Then they called the manager. Sir, why you have reported 2 crores have come into the account. Based on that, we have called the auditor, but no money has come into the loan account. Then what happened? The manager said, sir, the party has come and remitted 2 crores into the current account. He has come and remitted 2 crores into the current account and not to the loan account. Then actually the credit has come to loan account. Then only you can make the reversal. Then I said, sir, since the money has not come into the loan account, I will not consider this is going to be NPA. Then out of pressure, what this zonal manager did, he has transferred the money from current account to loan account from their end. From their end, they have transferred the money from current account to loan account. Then he called me and told, sir, I am fit for the post. I already told you are not fit for the post. And he said, sir, I am fit for the post. Please refer the account. The money has come. Then I looked into the account and saw, yes, sir, money has come, but I have to wait for 1 day. I will not give the my decision today. Then he asked me why. Sir, it is wrong credit. It's a wrong, you can remove it as wrong debit. So I will not, I have to wait for 1 day. So you have to, anyhow, if you wait for 1 day, we will not classify that account as NPA. Then next day, we said, next day you have to wait for 1 day. The concept here is, I want to tell what are the debits allowed in term loan is only loan account, interest and charges, and no further debit is allowed in the term loan account. What are the debits allowed in term loan account? Loan amount sanction, interest and charges. So here the money has come into the loan account. Then after half an hour or 45 minutes, some 7 Buddhas, they came to the branch. And they have gone to the manager and they started to have very big argument. Even one fellow has beaten the manager also. The thing is, the manager has given the advice to the party that you please come and remit the money in current account. I will show the money to the auditor. He will remove your account from NPA. So having the money in the current account will not serve any purpose. The money has to be given credit to the loan account. Then after some time, after seeing that, after hearing the direction from the manager, the party has borrowed the money from open market at the rate of 4 rupees interest, that is 48% interest. He has borrowed 2 crores and he has remitted the money into the current account. This is not our this we need not worry. Then I asked the security guard to stand in front of the cabin. Why? Because next hit is me. Because they already started to beat the manager. Next hit is auditor. Then that manager showed my cabin. Since the security guard has stood in front of my cabin, and since he has not allowed him to enter into the cabin, then they are gone. So auditors are also not safe inside the branch when you detect any fraud, when you detect any NPA also, and if they've got any big dispute. So then, since the money has come into the loan account, say to the extent of 2 crores, I have upgraded the account. I have upgraded the account from substandard to standard. So this is the exercise here, how to face the pressure one, and what are the debits allowed in term loan. Then that is the money has to come only to the loan account, and you can upgrade the account. This is in this case you can have four types of experience. So here I want to tell, you want to if you want, you want to upgrade, you have to upgrade only to standard and not from substandard to that is D1 to D2, D2 to D3, or D3 to D2, D2 to D1. So this is the way in which you have to understand the word downgrading and upgrading. Any doubt for this, you can ask. Any doubts, sir? Downgrading and upgrading. So everywhere we can get the everywhere will get the experience. Even you would have the experience. And even in about the pressure, NPA pressure, whenever you identify one account as NPA, normally people from regional office will come. So it has also happened in one of the rural branch. So the method adopted by the regional office is the regional manager. I have identified in one of the bank at Puducherthalam branch. I have identified some 33 crores, 30 crores as NPA, and it belongs to some various accounts. So the manager said, "Sir, I will not be able to convince the auditor. He is going on identifying the NPA. Sir, everything is NPA, but we have classified that account as standard. He is going on identifying, he is going on classifying the account as NPA." Then the regional manager, he came to the branch, then he never talked to me. What he did, he retained the manager along with him. He never allowed the manager to help me in the audit. This is also another technique they are adopting. The regional people from the regional office, or in my case, the regional officer has himself come to the branch, and they say that, "Sir, we will go for inspection." That means he has requested the manager to go out of the branch. The only if the manager is there, then he will give the records. Then I told the manager came to me and he told, "Sir, we are going out for inspection. You wait for 3 hours." Then I told the manager, "Sir, if I are going right now, I am going to close my audit, saying that non-cooperation. Because during the statutory audit, you are not supposed to go out. Whoever comes, I am not bothered." Then I went to the regional manager and told, "Sir, you are unnecessarily disturbing me from the statutory audit." The RBI circular clearly says that if the statutory auditor has commenced, no inspection should be carried out during the statutory audit. This circular is there. You are violating it. You are unnecessarily disturbing from the audit. Then right now I am going to complete the audit by even without signing the balance sheet. I'll leave the branch and I'll give you a qualified report by saying that you disturb, that is regional manager has disturbed me the audit, and you wanted the manager to go out for inspection, thereby you are wasting my time. I actually I have not scolded, I strongly used my words. Then within seconds he left the branch. So this is also another that is it is also another tactic. He said, "Sir, we will go for recovery because money has to come." Now, sir, recovery has to be done before 31st March and not during April. So if at all you want to go, you go after the audit is over. Why you go to the inspection now? And what is your audit program? What is your inspection program? You can tell me, because I am representing the head office. Don't disturb me in the audit. And you are not supposed to take the manager out, because it is he who has to give the evidence to me. Okay, sir, if you want, you go out and definitely I'll give this is my way of reporting. Then he immediately left the branch. So in this manner also you will get a lot of pressure. They retain the manager and they never allow the manager to come and help you. So they never give the pressure to you. So only manager is there, you can do the audit. If they retain the manager, then you will not be in a position to do the audit. So this is also another pressure they are giving. This is also another type of pressure they are giving. So don't deal to any pressure. So downgrading and upgrading. I'm moving to the next part is, this is a very, very important circular. There is one column in long form audit report that any sanction of the loan must contain the due date of the loan. In that sanction letter, the bank has to mention specifically the due date. This is a circular dated 12/11/21. That is, it has to be implemented. It has to be implemented after not, that is, it has to be implemented. That is after 31/12/21, it is a must one. After 31st/12/21, it's a must one. That is, any loan sanctioned on or after 31/12/21, on or after 31/12/21, it must contain the due date of the loan. That is, the sanction letter, the bank has to specifically mention the due date. In the existing loan, at the time of renewal or review, the due date can be mentioned. So in case of existing loan, in case of fresh loan, the fresh loan has to be sanctioned with the due date, with the due date. Okay, this is a very, very important thing. This comment you can make in the LFAR. In LFAR, there is one column say that is there any violation of RBI norms? I can vouch almost 80% branches, they fail to follow this circular dated 12/11/21. So this is one of the audit comments. So in case of review, at the time of review or renewal of the existing loan, you can follow this. The difference between review and renewal is review, you can use it for term loan. Renewal, you can use it for cash credit loan. Review, you can use it for term loan, and renewal, you can use it for the cash credit loan. So due date specification is a must one, because in NPA, you have to do the NPA working based on the due date. So the due date must be clearly spelled out in the sanction letter. This point you have to remember. Next point is NPA, that is everything, it depends on the sanction letter. Everything, it depends on the sanction letter. So first, now I am going to take only based on that is related to term loan, non-agricultural advances, related to term loan. And how to do the NPA classification, that I am going to consider. I am going to give the presentation. You forget the agricultural advances, you forget the cash credit advances. Now concentrate on the term loan. You concentrate on the term loan. How to identify the NPA with reference to term loan, non-agricultural advances. There are 5 methods of repayment. One is principal plus interest, equated monthly installments, holiday period interest plus installment, plus EMI or principal plus interest. Then fourth one is bullet repayment. Fifth one is balloon repayment. There are 5 types of loan repayment. There are 5 methods: principal plus interest, EMI, holiday period interest plus EMI, bullet repayment, and loan repayment. So these are 5 methods based on which you have to repay the loan. You have to repay the loan. Now, I'll go individually. So let me take the presentation for the principal plus interest. Please concentrate for 10 minutes. Just concentrate on 10 minutes. So term loan NPA classification is nothing. This is I'm going to speak about the principal plus interest. The sanction letter, they mentioned that the loan amount has to be paid to the extent of this much plus interest as and when it is debited. That means if the words are there in the sanction letter, then it is called as principal plus interest. Loan amount is there. Suppose if the loan amount is 6 lakhs, there are 60 dues. That means the party has to pay 10,000 per due plus interest as and when debited. If that is there, then it comes under the category of principal plus interest. You concentrate here. You have to remember the number of dues, then sanction amount, then outstanding. These 3 things that you have to see, and you have to forget the interest. You need not worry about the interest, because the sanction letter says that interest has to be paid as and when it is debited. So you forget the interest. Here you have to remember the word dues, sanction amount, then outstanding balance. Let me go to the first point. number of dues from date of sanction to 31/12/22. It is not it has to be calculated from 31/12/22 to that is number of dues from date of sanction to 31/12/22. From date of sanction to 31/12/22, you have to take. So if it is there, then for the point number 1, it is 50. Per due amount is 1000. That means the total amount the party has to pay is 50,000 rupees. The party has to pay is 50,000 rupees. Now, what is the sanction limit? Let us take it is 2 lakhs. Let us say it is 2 lakhs. So 2 lakhs, that is 50,000 rupees, you have to deduct from 2 lakhs. So the outstanding limit, point number 5, the outstanding limit should be 1,50,000. The outstanding, because we need not bother about the interest. We are bothered about only the principal. So here the principal should be 1,50,000. Now you go to the actual outstanding. Point number 6. In case if the actual outstanding is 1,48,500, that means the party has paid some amount in advance. Is it clear, sir? That is, if the outstanding is 1,48,500, that is, the outstanding should be 1,50,000. But actual outstanding is 1,48,500. That means the party has paid some amount in advance. So that account has to be treated as standard. In case if the outstanding is 1,53,500, there is an arrear. So that means the party has not paid the amount as per the sanction letter. So that account has to be treated as NPA. Is it clear, sir? If it is clear, then I'll move to the next point. You have to calculate the number of dues from date of sanction to 31/12/22. Why? The NPA cutoff date is 1/1/23. So you have to calculate all the dues up to 31/12/22. It is 50. And per due amount is 1000. That is, this will, you can get it from the sanction letter. So the total due the party has to pay up to 31/12/22 is 50,000 rupees. The sanction amount is 2 lakhs. So the balance should be 1,50,000. You go to the actual balance. There are two examples I have given. In the point number 6, if the actual balance is 1,48,500, means the party has paid the amount in advance. So that means that account has to be treated as standard. And if the amount is 1,53,500, then that account has to be treated as NPA. Is it clear, sir? This is rule number 1. That is first method, principal plus interest. I think I'm not going fast. I'm going very slowly. Step by step, I'm going. Is it clear, sir? Like Jendra Patel, sir. Yeah. Other friends? Patel sir said yes. Then anyone, if you have got any doubt, because I will stop here. You for me, yeah, Jayabalan sir, okay. Then others still other friends are yes. Shamgesha, yes. Super. And go to point number 2. Point number 2. Let us take point number 2 for revision. And if the dues are 42, per due is 35,000. The party has to pay 14,70,000. This 14,70,000 you have to deduct from the 25 lakhs loan. The outstanding limit should be 10,30,000, but actual outstanding is 9,85,000. So the outstanding is less than the point number 5. So that has to be treated as standard. Point number 7, the outstanding is 11,23,000. That means there is an arrear. So that account has to be treated as NPA. This is with reference to the first method. Now, next thing, I'm moving to the second method. Second method is a combination of principal cum interest, which comes to EMI, equated monthly installments. In that principal, it is principal cum interest. It is a principal cum interest. So I'm going to concentrate on the second method. In that second method, you have to remember the EMI. What is the total EMI? Second one is amount paid into the account. EMI and what is amount paid into the account. These 2 points you have to remember. So you have to calculate the EMI from date of sanction to 31/12/22. You have to calculate all the EMI. The date of sanction to 31/12/22. What is the total EMI? This is the amount due to be paid by the party. Go to the credit side. You have to add all the amount remitted into the account from date of sanction to 31/3/23. Why 31/3/23? Because the due amount of 31/12/22 can be paid on or before 31/3/23. So you have to go to the credit side, add all credit from date of sanction to 31/3/23. Now you compare it. If the amount paid exceeds the EMI due, then that account has to be treated as standard. If the amount paid into the account exceeds the EMI due, then that account has to be treated as standard. In case if the amount paid falls short of EMI due, then that account has to be treated as NPA. Here, the amount paid into the account, you have to consider only the genuine credit. Only the genuine credit that you have to consider. Now, what are all not called as genuine credit? That we'll see. That is, other person's money may come into the account. Other person's money may come into the account. You have to remove it. You are not supposed to add that one. Sometimes some loan account has been given credit to the this loan. So to avoid NPA, some loan would have been sanctioned and they have given credit to the account. That amount should also be removed. 2. And the subsidy amount can also be come into the account. The subsidy amount also they are giving credit to the term account. So since I said about the subsidy, there are 2 kinds of subsidy. One is front-end subsidy. Next one is back-end subsidy. Front-end subsidy and back-end subsidy. Front-end subsidy you can directly adjust directly to the loan. Whenever the subsidy money has come from the government, you can directly adjust to the loan amount. That is called as front-end subsidy. With reference to back-end subsidy, the back-end subsidy can be adjusted only after the loan period is over. And there is one period, if everything, it depends on the subsidy sanction letter. There is a subsidy sanction letter. In that, they will clearly mention on what date the subsidy has to come. Suppose if it comes before, before law, 3 years, before there is a lock-in period of 3 years, and within that lock-in period, you are not supposed to transfer the subsidy to the loan account. If any transfer comes from that from during that lock-in period, that is called as it is not a genuine credit. 1. And you can transfer the subsidy from between 3rd year to 4th year up to 50% you can transfer. If they transfer 50%, then remaining 50% the bank has to repay the same thing to the government. And if the subsidy repayment is being adjusted between 4th year and 5th year, 75% can be transferred to the loan account. The remaining 25% has to be returned to the government. And if the subsidy, that is the loan amount cross 5 years, that is loan period, then full subsidy can be given credit to the loan account. This transfer of 50% or 75%, it will be clearly mentioned in the sanction letter, whether it is a 60% or 40% or 30% or 70%, everything will be clearly mentioned in the sanction letter. So the branch, they have to act according to the sanction letter given by the government with reference to subsidy. So the subsidy should not be given credit to the term loan account. So you have to consider only the genuine credit. Now I explained about the genuine credit. Now come to the problem. You have to calculate all the EMIs due from date of sanction to 31/12/20. No, that is the EMI due to be paid. You have to add all the genuine credit from date of sanction to 31/3/23. Here the money has come. Here the due has come. You have to compare it. If the money exceeds the money paid into the account exceeds the due, then everything is serviced. That account has to be treated as standard. In case if it is not serviced, that is money paid into the account falls short of the due, then that account has to be treated as NPA. This is what I want to say about the second one. Any doubt you can ask. Calculate the EMI from date of sanction to 31/12/22. Why 31/12/22? NPA cutoff date is 1/1/23. Is that clear, sir? Here, the amount total EMI to be paid is 50,000. Paid into the account is 60,000. So that means everything is serviced. And in case point number 5, if there is a deficit of deficit of 10,000, 40,000. So that means there is a shortfall. That account has to be treated as NPA. So sometimes bank is disbursement. So Shamgesha, it is not the disbursement. It is, you have to calculate the EMI due to be paid. The disbursement is different. For this, you have to go and see the sanction letter. In the sanction letter, they say that, no, this amount, the EMI starts from this date. So the EMI starting date is clearly mentioned in the sanction letter. The disbursement concept is different. It has got nothing to do with the NPA classification. So it is only the EMI fixation. This EMI fixation you have to consider. Anvesha? Okay, sir. Thank you. Any doubt? Yeah, it's a very, very simple. So even I can vouch to understand this, I have taken some 4 hours to 5 hours to prepare this slide so that you can easily understand this. And let me go to the second exercise. The EMI due is that when 14 lakhs 70,000, but the party has paid the amount to the extent of 15 lakhs. So that means the party has paid excess paid. So that account has to be treated as standard. Point number 5. Instead of for the due of 14 lakh 70,000, the party has paid only 14 lakh 23,000. Then that account has to be treated as NPA. This is what I want to tell about the point number 2 EMI concept. Any doubt you can ask. If it is clear, then I'll move to the point number 3. Can I move to the point number 3, sir? If you have got any doubt, you can ask. Okay, I'm moving to point number 3. Here, it is holiday period. Holiday, how to calculate holiday period? The concept of 1 and 2 are applicable here for this problem. Only thing is you are adding only the holiday period. What is when by holiday period or gestation period or moratorium period? Suppose a housing loan is there. There is a time required to construct the house. So during the construction, the party is asked to pay only the interest, not the principal or not the EMI. So when there is a EMI, there is a holiday period, the parties has to pay only the interest. And the sanction letter says that during the holiday period, the party has to pay interest as and when it is debited. And the EMI starting date also will be clearly mentioned in the sanction letter. So you have to calculate all the holiday period interest plus the EMI due up to 31/12/22. So this is there here in the second method, it is only the EMI you are taking into the picture. Here you are taking holiday period interest plus EMI. This is the 2 things that you have to remember. For example, if the holiday period interest is only 20,000 and EMI due is 50,000, point number 4, EMI due is 50,000. That is, the party has to pay total amount of 70,000. The party has to pay total amount of 70,000. Point number 6, the party has paid 80,000. That is the genuine credit is 80,000 from date of sanction to 31/3/23. The amount due to be paid is 70,000. The party has paid 80,000. Then everything is serviced. Then that account has to be treated as standard. Otherwise, it has to be treated as NPA. Is it clear? Same method. Only addition is you have to add the holiday period interest. You have to add the holiday period. Is it clear, sir? Holiday period plus point number 4, EMI due to be paid. The total amount paid is 70,000. Amount paid is 80,000. That means the party has paid the amount in advance. So it has to be treated as standard. Otherwise, it has to be treated as NPA. Are you clear, sir? If you got any doubt, you can ask. You put your answer in the chat box. Think members are calculating or any doubt you can ask. This is another important area. Can I move to the next point? Because the third method I have explained, it is in addition to the second method. Only thing is you have to add 20,000. Even I can vouch one very important thing. Almost 80% of the housing loans will become NPA. And almost 80% of housing loans will definitely become NPA because the system never cash at the holiday period interest. So this time when you are going for the audit, you have to be very, very careful at the time of when you verify the housing loan. You have to see whether the holiday period interest is being taken into account or not. So this is a very, very important point. Now I am moving to the point number 4. Is it, can I move, sir? Or if you got any doubt, you can ask. I'll wait here. Because now hereafter I will not come to the third method. Shanmuga sir, clear sir, thank you. Jabal sir, Vijay sir. Yeah. I think Sudhir sir is not there, man. Together, you are there, no? Okay, now I am moving to point number 4. That is bullet repayment. Bullet repayment. This is a very, very important loan. This is a very, very important loan type of loan repayment. That means at one shot you have to make the. So jewel loans are coming under the category of bullet repayment because jewel loan is they mention only the due date. Within this date you have to make the repayment. There is no monthly payment allowed. There is no sanction of monthly repayment. In 1 year or 2 years, you have to repay the loan, or in 18 months, you have to repay the loan. The repayment loan is fixed. It is called as bullet repayment. At one shot, you have to make the payment. And during COVID, the RBI said that you need not go and pressurize the party to make the interest. What they did, all the interest they added during the COVID, and they fixed the interest due as one term loan. That term loan is called as FITL, funded interest term loan. FITL, that is called as funded interest term loan. They say that this FITL has to be paid on or before 31/3/21. All the interest they have added, and they have to make payment on or before that particular date. That is 31/3/21. If it is not paid, then that account has to be treated as NPA. Here, few bankers what they
Tela, yang boya sab. Yan git ko buya bata.
bankers what they did.
Lagi, odle, yan okane bata.
What they did, they restructured the FITL. They changed the due date to the next year. They changed the due date to the next year. They change the next year. They change the due date to next year. That is, regarding restructuring, I want to tell a common rule. Pre-COVID and after COVID. Pre-COVID, because during COVID, if any restructuring is done, it has to be treated as standard. In case pre-COVID, if there is any restructuring, and after COVID, if you've done any restructuring, that means the party has, that is the banker, they have to take the loan account to the next status. If a standard account is being restructured, you have to classify that account as substandard. So that means indirectly, it's a clear meaning that if any restructuring is done to a loan account, that account has to be treated as NPA. Here, the FITL, they change the due date to the 1 year. From 31/3/22, they change the due date to 31/3/22, 21 to 22. That means they restructured the FITL. So that account has to be treated as NPA. If it is that, when you are going audit for the financial year 22/23, you have to be very, very careful. whether the branch has done the FITL restructuring. If they done the FITL restructuring, then that amounts to NPA. This is one. And regarding jewel loan, one very important thing is the party has to, normally they pay only the interest and they renew the jewel loan. If it is renewed by way of payment of cash, then that has to be treated as a genuine transaction. And if the renewal is done by way of transfer, that account has to be treated as NPA. They pass the entry in such a manner that principal plus interest is being paid into the account. And here they say that it is the transfer. If there is a transfer from one account to another account, from old loan to new loan, that amounts to NPA. So at the time of verification of jewel loan, you have to be very, very careful. This is another method of loan repayment, FITL. So from the due date, you have to calculate the 90 days. If the loan amount is due on 31/3/21, that is FITL is due on 31/3/21. So 31/3/21 is 1 day, and April 30, then May 31. So it amounts to 62 days. So 28th is the June. 28th June is the 90th day. So if the amount due on 31/3/21, if it has not been paid on or before 28th June, then that account has to be classified as NPA on 29th June 2021. So regarding FITL, you have to calculate the 90 days from the due date. Then next repayment is called as balloon repayment. So balloon is looks like here. So in the first year, there's a less installment is fixed. Second year, little bit. Third year, little bit. Fourth year, little bit. So just like a balloon, the repayment increases. This repayment is being fixed based on the funds generated from the project. Let us go to the educational institution. The educational institution, the first year, the admission is only 100. And from the 100 students, what are the funds generated? Based on that, they fix the repayment. The second year, it is 200. The third year, it is 300. So based on the funds generated, the repayment is being fixed. That is called as balloon repayment. So I think I have explained all the thing about the high repayments. If you are comfortable, I'll move to the cash credit loan. And before going to that, you have to confirm whether all the five payments you are easily understood. There are 5 methods. One is principal plus interest and EMI concept, holiday period interest plus holiday period plus EMI concept. Fourth one is bullet repayment. Fifth one is balloon repayment. So I'm moving to the next method. That is called as, here everything is based on the sanction letter. This is what I want to say. Everything is based on the sanction letter. The next one is loan and education loans will definitely become NPA because on my experience as a system, sometimes considering the holiday period interest. So you have to be very, very careful. But you do the NPA working for the housing loan as well as the education. Now, I am going for the cash credit loan. Here, there are 8 methods. There are 8 methods based on which you have to identify one account as NPA. And cash credit loan, there are 8 methods and everything is based on the sanction letter. Everything is based on the sanction letter. And any loan sanctioned on or after 1/1/23, you need not bother because everything we have to treat it as standard. This only with reference to sanctioned amount. Any loans sanctioned on or after 1/1/23, you have to treat it as standard only. This is the first method. I'll give you the 3 methods. 1 and 3 are one and the same. 1 and 3, step 1 and step 3 are one and the same. In step 1, now you forget the term loan, forget the agriculture advances, come to every year it has to be renewed. So with reference to CC account, You have to calculate the NPA working for every quarter. Every quarter you have to do it. For easy understanding, I have taken only the last quarter. For easy understanding, I have taken the last quarter. So here, first month, in the first method, on some days the outstanding balance has exceeded the sanction limit. On some days the outstanding balance is below the sanction limit. In step 3, the outstanding balance will always be below the sanction limit. The calculation of 1 and 3 are one and the same. The calculation of 1 and 3 are almost equal or one and the same. So first method, outstanding balance exceeds the sanction limit on few days and sometimes it may be less. But in third method, the outstanding balance will always be below the sanction limit. Now, coming to the calculation, you have to add all the interest debited into the account. This interest includes penal interest also. This interest includes penal interest also. You have to calculate the interest for the period from 1/1/23 to 31/3/23. What is the interest due to be paid? Go to the credit side. What is the amount actually paid by the party? You compare it. What is the amount due to be paid in the form of interest? What is the amount they paid? You compare it. If the amount paid exceeds the interest, then all the interest is serviced, then that account has to be treated as standard. Otherwise, it has to be treated as NPA. Is that clear, sir? You have to debit, you have to add all the interest debited into the account from 1/1/23 to 31/3/23. What is the interest due to be paid? What is the amount actually they paid? You compare it. If the amount paid exceeds the interest, that means all interest is serviced, then that account has to be treated as standard. Otherwise, it has to be treated as NPA. Is it clear, sir? 1 and 3 are one and the same. Only thing, it differs with the outstanding balance. Any doubts? Because it's a cash credit loan. Here, the interest has to be serviced. Interest has to be serviced. 1 and 3. Whether there's a service of interest, that is very much important. Going to step 2. At least on one, that is, step 2 is related to the outstanding balance. If at least on one particular day, the outstanding limit should be below the sanction limit. That if the outstanding limit is say 10 lakhs, and if for the entire quarter, if the outstanding limit is above 10 lakhs, then that account has to be treated as NPA. At least on one particular day, if the outstanding limit is below the sanction limit, say 9,99,999, then that account can be treated as standard. So in 1 and 3, the interest has to be serviced. In the second method, the outstanding balance, at least on one particular day, it should be below the sanction limit. Any doubt up to this? Sanction 1, step 1, step 2, step 3, you have to tell. If you have got any doubt, you can ask. Any doubts, sir? Step 1, step 2, step 3. Step 1 and 3 are one and the same. And step 1, it is clearly mentioned that interest has to be serviced upon 1 and 3. In step 2, the outstanding balance should be below the sanction limit, at least for one particular day. At least on one particular day, the outstanding balance should be below the sanction limit. And Jitendra Patel sir said yes, clear. Then what about other friends? Shanmugesh sir said yes. I think others, Jaipal sir and Bardish, yes, Bardish. I think you have attended the, actually some 2 days before I went to Udupi, there Bardish sir has attended the class. So I think you'll be a master now. I'll be a master of NPA now. Jaipal sir, yes. Now I'm moving to the step 4. I'm moving to the step 4. Before that, I want to tell step 4 is related to drawing power. First thing, how to calculate the drawing power. That point I have to touch. Here, drawing power can be calculated based on the stock statement, data statement submission. The data statement. So here you have to refer the sanction letter. Here you have to refer the sanction letter. So see the margin. What is meant by a margin? Margin is the owner's contribution. Suppose if the stock is 100, the stock value is rupees 100, and the owner contribution should be 25. And the banker's contribution is 75. That 75 is taken as equity. That is, banker's contribution has to be taken as drawing power. So the margin means it is owner's contribution. So you have to refer the sanction letter. In the sanction letter, they will clearly mention what is the margin. Next one is the stock statement has to be submitted on monthly basis, quarterly basis, half-yearly basis, annual basis. So this also you can find from the sanction letter. The date of submission will also be clearly mentioned in the sanction letter. 7th of the following month or 10th of the following month, then you have to go through the date of submission and whether you have to see whether the branch, whether the customer has submitted the stock statement as per this. Next one is stock statement and stock register. The difference between stock statement and stock register is the stock statement is a statement submitted by the borrower to the banker. Stock register. Stock register is the register prepared by the branch manager based on the stock statement submitted by the borrower to the bank. So this is the thing that you have to remember, stock statement and stock register. Next one is delay in submission, it attracts penal interest. In case if the stock statement has to be submitted on 7th of the following month, the same is being submitted on the 27th of the following month, there is a delay in submission, then this delay in submission, then they have to charge the penal interest. The penal interest has to be charged for the entire 27 days and not for 20 days. This point you have to remember because the time, though the time that they are given on 7th, there is a delay of 27 days. The penal interest has to be collected for the entire 27 days and not for 7 days. So delay in submission of stock statement, it attracts penal. And next one is item tallied with the sanction. What is the item tallied with sanction? This loan is sanctioned for the purpose of one business. Let us take it is furniture. In case the items that is mentioned in the stock statement contains all items other than the furniture. Say if any some vehicle is added or some provision items are added in the stock statement, that you have to remove it. So you have to calculate, you have to consider the stock statement only with the reference to the item sanctioned in the loan. And next one is the signature that is put is that is being that the stock statement, the signature that the borrower has put on the stock statement. The stock statement has to be signed only by the borrower and not by anyone else. This point you have to remember. The signature, that is the stock statement, has to be signed only by the borrower. Sometimes the staff of the customer would have signed the stock statement. If that is there, then you have to treat that stock statement as invalid. That means that you are not submitted the stock statement. So you have to treat it as 0. So items tallied with the sanction that you have to see. Next one is branch manager can do the inspection after submission of the inspection. Next item is LC stock should not be included. LC stock should not be included in the stock. That means in with reference to LC stock, the ownership lies with the supplier of the goods till the payment is being made. So LC stock should not be forming part of the stock statement. Then only you have to arrive at the drawing power. This is with reference to the stock statement. And with reference to debtor statement, please refer the sanction letter and arrive at the margin. And age-wise and customer-wise, the sanction letter says that we consider the debts only up to 90 days, 120 days. Beyond those days, we will not consider as a good debts. You have to exclude all those debts. So the debts up to 90 days or 120 days, you have to take it as the good debts. So based on that, you have to do the working. And sister concern debts should not be included in the data statement. And CA certificate has to be obtained once in a quarter or once in a half year. That is with reference to data. That is the statement and data statement. The chartered accountant has to sign and give you a certificate once in a half yearly, once in 6 months or once in quarter as per the sanction letter. Here there are a lot of cases because other than the statutory auditor, if other auditors, they will come and sign this stock statement. Don't do this. Don't do the don't sign the stock statement. Don't sign the other auditors cases. There are a lot of CBI cases are pending against young chartered accountants who have signed the statements. So please don't do it. The CA certificate, obtaining CA certificate is a must one, but this CA certificate must be signed only by the statutory auditor of the company and not by anyone. So this is another point. And next one is you have to analyze the bad debts. If there is any bad debts, you can take that to losses. Now, how to calculate DP on a consolidated manner? Yes, I'll go for the stock first. Total stock. This is the total stock, less LC stock, less creditor stock, less LC stock. That is called as paid stock. Point number 3 is called as paid stock. From the total stock, deduct the obsolete stock, deduct the creditor stock, deduct the LC stock. This amount is called as paid stock. From that paid stock, point number 3, deduct the owner's contribution. That is called as margin, 25%. This 25% or 30%, it will be clearly mentioned in the sanction letter. Remaining amount is called as the drawing power. So that means owners, that is banker's contribution is called as drawing power. So paid from paid stock, deduct margin, then you can arrive at the drawing power as per the stock. Now we have the debtors. The total debtors less debts above 90 days or 120 days, you have remaining debt is called as good debts. In that good debts, deduct the owner's margin of 40%. And remaining amount is called as drawing power. So we have seen the drawing power as per the stock, total stock, less stock, less creditor stock, less LC stock. That is called as paid stock. From the paid stock, deduct margin, you will get the drawing power. Now go to the debtor statement. Total debts, eliminate all those debts above, which are above more than 90 days or 120 days. 90 days or 120 days, you can find from the sanction letter, and that is called as good debts. From the good debts, deduct the margin, and remaining amount is called as drawing power. Is that clear, sir? Now I am touching the stock audit also. In stock audit, you have to do the same exercise. I am touching the stock audit also. Any doubt up to this? How to calculate DP? Next point is DP as per stock is this. DP as per debtor is this. What is the total DP that you have to arrive at? What is the total DP that you have to arrive at? And point number 3 is the total drawing power. Point number 3 is total drawing power. And compare this total drawing power with the outstanding balance. Compare this drawing power with the outstanding compare this outstanding balance with the drawing power. The logic is the outstanding balance should be always below the The outstanding balance should be always below the DP. In case if the outstanding balance exceeds the DP, outstanding balance has exceeded the DP for a continuous period of 90 days, then that account has to be treated as NPA. So here I said about the DP calculation and go and compare the same thing with the outstanding balance. Then if the outstanding balance exceed the DP for a continuous period of 90 days, then that account has to be treated as NPA. This is step 4. Any doubt with reference to this, you can ask me. Drawing power should be always less than the, if the drawing power, that is outstanding balance, should not exceed the drawing power for a continuous period of 90 days, then if it exceeds, then that account has to be treated as NPA. Is it clear? This is step 4. Yeah, step 7 and 8. You please, so first thing is outstanding balance should be always below the drawing power. This I explain. Go to the step 7. Non-submission of stock statement. In case the non-submission of stock statement and data statement, that is for the month of November. That is November month stock statement should be submitted on or before 31/3/23. Otherwise, that account will be termed as NPA, because for the November, in case of submission, non-submission of stock statement, the drawing power has to be taken as 0. The drawing power has to be taken as 0. So it has to be regularized on or before 31/3/23, because November 21 stock statement has to be, November 22 stock statement has to be paid on or before 7th of the following month. If it is not paid, then drawing power for the month of November 22 should be 0. So that account has to be treated as NPA. Even step by go, you please go to the step by, you can see even non-submission of the stock statement, even for but for the entire 12 months, you are submitted, the party has to submit the stock statement, whether belatedly or on time. In case the April month stock statement has not been submitted, and the remaining 11 month stock statement they are submitted. So non-submission of April month stock statement will make the account as NPA. So it is your duty to verify whether the party has submitted all the stock statements on time. So this point you have to remember. You have to see whether the stock statement has been submitted by the customer on time, or if it is submitted belatedly, the banker, they have to charge the penal interest. Otherwise, it has to be, if the stock statement is not submitted, then that account has to be treated as NPA. Any doubt for this step 4, step 7, step 8? This is directly related to submission of the stock statement and data statement. Any doubts, sir? I will explain about the step 5 and step 6 later. You please concentrate on step 4, step 7, step 8. Any doubts, sir? In step 1, step 2, step 3, step 1, step 3, it is based on the outstanding balance. You have to add interest and arrive at. And step 2, at least on one particular day, the limit should be brought down below the sanction limit. Step 4, step 7, step 8, the outstanding balance should not exceed the drawing power. The outstanding balance should not exceed the drawing power. Is it clear, sir? No doubt, yeah. Japal sir said no doubt. Shamgesh sir, okay. Sarvan sir. Okay, now I am moving to step 6 and step 5. So step 5 says that a cash credit limit is valid for a period of 1 year from the date of sanction. As per the 12/11/21 circular, the credit limit, that is due date of the cash credit loan, should be specifically mentioned in the sanction letter, should be specifically mentioned in the sanction letter. And here I'll tell one thing, a cash credit loan is due today. It has to be renewed within a period of 180 days from today. And the party has to submit the renewal papers to the bank. On submission of the renewal papers, the bank, they will renew the loan. If it is not renewed within a period of 180 days from the original due date, then that account has to be treated as NPA. So I use the word original due date. Why I use the word original due date, I'll tell. See, sometimes the party made a delay of submission of the stock statement, delay of renewing the stock statement, then the party the limit is not renewed within a period of 180 days from the original due date, then that account has to be treated as NPA. Sometimes the bankers, they may extend the due date, for a short period of 2 months or 3 months. Yes, it is permitted. They can extend the due date for some 2 months or 3 months. But all this extension of short renewal or temporary renewal should be part of this 180 days. This should be part of this 180. This should be made as part of that short renewal and temporary renewal should be part of this 180 days. Should be part of this 180 days. So that means you have to calculate the 180 days from the original due date. From the original due date. That is, if the loan amount is due on 39/92, within 180 days you have to renew it. Otherwise, that account has to be treated as NPA. And not from the temporary extended due date. In most of the branches where I have gone for audit, where I have gone for presentation, so I have presented some these papers to the branches, to the chartered accountant. They say that, sir, we have calculated 180 days from the temporary extended due date. No, you have to calculate this 180 days only from the original due date and not from the temporary due date. This temporary renewal and short renewal should be part of this 180 days. This point you have to remember. Is it clear, sir? Yeah, cash credit loan has to be renewed within a period of 180 days from the original due date, one, and the temporary and short renewal should be part of this 180 days. You have to you are not supposed to calculate this 180 days from the temporary renewal date. You have to calculate the renewal, you have to calculate this 180 days from the original due date. Is it clear? It's a very, very important point because identification is very, very important. Any doubts, sir? "180 days within one." See, here I'll tell one very interesting case. This about this concept. See, I've gone for a stock audit. I've gone for a stock audit. In that stock audit, that's a column whether the account is standard or not. This is the question they are raising in the stock audit. And the statutory auditor, as on 31/3/22, I think it's as on 31/3/22, sorry, 31/3/21. The statutory auditor was gone audit for the year ending 31/3/21. He has classified that account as standard. The statutory auditor has classified the account as standard. But I have gone for the stock audit in the month of June 2021. When I look into the transaction, I found that the limit has not been renewed, and from the 180 days, the 180 days ends on 29th of January. 28th of January. And the RBI says that if the account is standard as on 29/2/21, you can give some excess in the form of COVID loan. This is what RBI circular says. But the statutory auditor of 31/3/21 say that account is standard. So the party is entitled to get the COVID loan. as per the statutory auditor report. But the bank also, they also release the fund to the customer. When I went for the stock audit, I found that the account has already become NPA on 29th of January. So I classified that account as substandard as on 29th of January, and the excess given by the banker is against the RBI norms. This is what I have reported. Then there was a controversy between the statutory auditor and stock auditor, and the RBI has come to the rescue and they verified the loan statement. They say that yes, the stock auditor is correct, his identification is correct, that is me. But they have issued notice to the statutory auditor, why you have not classified this account as NPA? Because of your wrong classification, the bank has sanctioned COVID loan, that is additional COVID loan to the borrower. So identification of NPA date is very, very important. So this identification of 180 days from the original due date is a must one. So you have to calculate the 180 days renewal from the original due date, one, and the temporary renewal and short renewal should be part of this 180 days. Any doubt for this? Then I'll move to the, if it is not there, then I'll move to the next slide. This is the 8th method based on which you have to do the NPA. Any doubts, sir? Got any doubt? Because first method and third method is based on the outstanding limit, and second method, at least on one particular day, the limit should be brought down below the sanction limit. Step 4, 7, and 8, it depends. It is based on the drawing power concept, and step 5 and 6, it is the concept. The concept is it is based on the renewal concept. So if you are thorough with this, all these 8 principles, then you can easily identify one account as NPA with reference to cash credit loan. Any doubts, sir? I think Jabal sir and Badish, you are there, no? Okay, I'm moving to the next slide. So far, we have seen the cash credit. Next one is cash credit loans, that is packing credit loan, bill discounting, crystallized bills, LC, credit cards, calculate from the due date of the payment. That is 90 days. You have to calculate from the due date of the payment. Here, one can say what is meant by a crystallized bill. So a bill is being discounted by the banker and the bill is sent for collection. The party has not paid the amount even beyond some 180 days or 365 days. The bankers, they have to recall the loan, recall the bill, recall the loan. Then the party has to make the payment. With reference to forex transactions, the loan has to be closed only out of the foreign currency and it should not be closed out of the Indian rupee. Then what the bankers they do, they buy the forex from the open market and they adjust the same thing to the loan account. They adjust the same thing to the loan account. This type of recalling the loan and they closing the loan, that process is called as crystallized bills. The data from the date of crystallization within 90 days, the borrower has to make the payment to the bank to close the loan. Otherwise, that account will become NPA. This is the concept. So even the PC also is due. From the due date of PC, you have to make the payment. So with reference to forex loans, in case of PC, the packing credit loan is being sanctioned based on the export order. Only when you see the export order, then only the packing credit loan will be released. And this packing credit loan should be closed only out of the export process. If it is closed out of the Indian process, then the bankers they have to charge the higher interest. So this is a concept with reference to packing credit loan. And you have to calculate first. You have to arrive at the due date. From the due date, you have to add 90 days. And here, NPA has to be calculated on borrower wise and not facility wise. NPA has to be calculated on borrower wise and not a facility wise. Here, I want to tell one thing. One facility has become NPA. The borrower has got 7 facilities. All the 7 facilities of the same borrower will be treated as NPA. This point you have to remember. In case if a car loan has become NPA, then the parties jewel loan, personal loan, term loan, CC, everything will become NPA. It is not facility wise, it is borrower wise. Here I want to tell another two to three important points. A partnership firm has become NPA. This doubt you will get. A partnership firm has become NPA. Partners loan will not become NPA. If partner has become NPA, partnership firm will not become NPA. If borrower loan has become NPA, guarantor loan will not become NPA. If guarantor has become NPA, borrower will not become NPA. This point you have to remember. A director has become NPA, company will not become NPA. If company has become NPA, director loan will not become NPA. Is it clear, sir? Directors, partners, then borrower. If they become NPA, others will not become NPA. If others become NPA, these three will not become NPA. This is a basic concept. Partnership form, and because it is a borrower-wise concept. So for each and every borrower, you have got two separate SIF. SIF means customer index folio. Every bank customer has got one number. So the NPA has to be calculated as per the SIF. So firm become NPA, partners loan will not become NPA. This point you have to remember, and not vice versa, as well as vice versa. Company has become NPA, then directors will not become NPA, and vice versa. Third one is borrower has become NPA, guarantor will not become NPA. Guarantor becomes NPA, borrower will not become NPA. This point you have to bear in mind and you have to do it. So NPA has to be calculated on borrower wise. Any doubt up to this, sir? I want to confirm because my intention is you should be a master of NPA when you complete the session. Yes, Tanveshwar, yes. Now I'm moving to the next idea. That is other important points of NPA. Unrealized interest calculation has to be done to eliminate the income portion of from the new NPA. What is meant by unrealized interest? I'm going to tell you. See, once if you identify one account as NPA, you have to eliminate all the unrealized interest from the account. Here, for this, I'll go to the example directly. There are 3 methods of unrealized interest. There are 3 methods of unrealized interest. There are 3 methods of unrealized interest. That means you have to eliminate the unrealized interest from the account because that is not the real profit. It is only a what's that? It is only it is not a profit. But bankers they thought that it is a profit. So you have to remove the profit. So this exercise it is applicable only when you identify the NPA account for the first time. And for subsequent years, this rule is not applicable. So here they say that you have to remove the unrealized interest. This unrealized interest includes penal interest and charges that is debited into the account. And you have to remove this from the past period. Past period means, according to me, it is from the date of sanction. Previously it was not clear, but the circular dated 1/10/21 and the master circular dated 1/4/2002, they say that you have to remove the unrealized interest of the past period. This word, when you go and read that circular, you can remember this. You have to remove the unrealized interest for the past period and you have to arrive at. Here, for purpose of easy understanding, I have taken only 2 years. 21/22, 22/23. Here, add all the interest debited, add all interest, penal interest, charges. Interest means interest, charges, everything you have to consider. Add interest from April to March, that is 48,000. You just concentrate, I need your 5 minutes time. That's all. You can easily understand. Add all interest from April to March, 48,000. The genuine credit is only 32,000. So for the year 21-22, there is a shortfall of interest collection to the tune of 16,000. And go to the 22-23, there is a shortfall of 9,300. Same exercise. So that means in total, there is a shortfall of 25,300 for the last 2 years. But the rule says it is past period. Suppose if the loan is for 7 years, you have to do this exercise for the entire 7 years. It's a tedious job. But anyhow, as per the RBI norms, you have to do it. You have to remove the unrealized interest from the profit. So here, both the years have got the unrealized interest. Both the years you have got the unrealized interest. So that works out to 25,300. This you have to eliminate from the profit. So you have to debit interest because interest is given credit to the P&L account. You have to debit the interest, credit the party account. Debit interest and credit the party account. So account is tallied. You have removed the entry. This entry you have to pass it on the MOC, memorandum of changes. You have to give the effect, and you have to compare the same thing to the bankers working. So you will definitely give. You have to give a lot of MOC because of this unrealized interest concept. Because they consider only 1 year. They consider only 1 year because they don't want to remove the profit. They don't want to remove the profit. But the RBI circular says you have to do it for the past period. So this word you have to remember. For easy understanding, I have given only 2 years. So first year and second year. First year 16,000 short and second year 9,300. The total unrealized profit is 25,300. And this has to be eliminated. Is it clear, sir? How to remove the unrealized interest? Is it clear? Any doubt? Unrealized interest working, both the years have got the shortage. This you have to eliminate from the profit. Now, I am moving to the second method. Here, in this second method, 21-22 has got a shortage of 16,000. 22-23, that is current year, you have got a surplus of 17,700. Last year there was a deficit of 16,000. This year has got a deficit of surplus of 17,700. So out of this surplus of 22-23, you can adjust against the deficit of last year. Last year there is an arrear. This year the party has paid some advance amount. With this advance amount, you can adjust the last year arrears. So the unrealized interest for the both the year is 0. Correct? For both the years, it is 0. And third method, last year you got surplus and this year you got deficit 2,300. Last year you got surplus. This year you got deficit of 2,300. Last year's surplus would have been adjusted in the principal of last year. There is no balance left. So last year's surplus, you cannot adjust against the current year deficit. So the logic is, if the current year surplus, you can adjust against the last year deficit, and last year surplus, you cannot adjust against the current year deficit. The last year surplus would have been adjusted to the principal, so there is no balance left in the last year. So the unrealized interest for the year 22-23 is 2,300. Is it clear, sir? In the first method, both the years have got deficit. Both the years you have got deficit. Okay, you can add and arrive at the unrealized interest. In this second method, last year you have got deficit. This year you have got surplus. This you can adjust. And not vice versa. That is third method. Last year you have got deficit, surplus. This year you have got deficit. You can adjust, you cannot adjust because this 22,000 would have been adjusted in the last year principal. So there is no money left. So only 2,300 is the deficit. This can be treated as unrealized interest. Is it clear, sir? For the first time you have to do it. Once you identify that account as NPA, no further interest has to be charged on the NPA account. And you have to remove the unrealized interest, and this unrealized interest, interest means interest, penal interest charges. This you have to do from the date of sanction to 31/3/21 or 22. For every year, they say that it is past period. It is not one thing. In one of the session, one auditor asked, sir, last year auditor would have done this. Why we have to do this revision? The circular says last year auditor, he might have committed some mistake, but this year you have to go and sign the report. Once you identify that amount as NPA, you have to eliminate all the unrealized interest. Is it clear, sir? There are three methods. Both the years you have got surplus, both the years you have got unrealized interest. This is first method. In this second method, first year has got, this method, first year has got shortage, second year has got surplus, you can adjust it. And in this third method, first year you have got surplus and you cannot adjust against the deficit of the subsequent year. Is that clear, sir, with reference to unrealized interest? So if you got any doubt, you are always welcome, sir, no problem. Now, I have explained about the unrealized interest. Can I move to the next slide, sir? Because you have to permit me, because you have to be thorough. You have to be thorough. Jabal sir said yes. Then about other friends, Shanwa sir, yes. Sir, don't worry at all, sir. I am here. And whatever be the doubt, even if you are going to the audit, if you have got any doubt, don't hesitate me. Don't hesitate to call me. I'll be here and to help you all. Okay, I'm moving to the next point, unrealized interest. Next point, after identifying one account as NPA, no further interest has to be debited. The same will be kept in the shadow balance. So what is shadow balance? It's a mirror account. So just say as per, directly you are not supposed to add to the P&L account. To the party account. They maintain a mirror account. In that mirror account, you can find the original transaction. So that means no further interest has to be debited once an account becomes NPA. The date of NPA is very, very important. Identification of date of NPA is very, very important. That is why in my exercise, I say that if the loan is not, 19/1/2021, the loan has already become NPA, but the statutory auditor said that the account is stranded. So identification of NPA is important because the RBI circular says the account should be stranded as on 29/2/21 to avail the COVID loan. If the account is not stranded as on 29/2/21, that party is not eligible to get the loan. So date of NPA, identification of NPA date is very, very important. And in case there is no DPN, or DPN is time barred, you can treat that advance as loss asset as the same case you cannot file before court of law. So identification of, you have to verify whether the party has got the DPN or not. DPN means demand promissory note. If that is not there, then that has to be classified as NPA, because there is you cannot file the case before court of law. There is no possibility for the recovery. Only when you file the case before court of law, it is possible for you to get the recovery. Since it is not there, then that account has to be treated as loss asset. Next point is erosion in property value. This is also very, very important. Here, for this, I will tell one very important case, very big case that I have faced in my lifetime. I have gone for a credit audit. So erosion in property value. Now, if you forget everything, I am going to explain what is meant by erosion in property value. You can directly classify that asset as doubtful asset or loss asset. I will tell with an experience which I have got in my life. I have gone for the credit audit for a particular bank. It is a takeover loan from other bank. It's a takeover loan from other bank. And my patient is I will always refer the legal opinion. I will always refer the valuation, but I cannot rely on it is for me only. I cannot rely on the legal opinion. I cannot rely on the valuation. I'll take that as my reference. Okay. I know how to prepare the legal opinion. So this exercise also I want to see. You have to be a master in preparation of legal opinion. That means you should know what are the points that you have to consider at the time of preparation of the legal opinion. So that means how to trace the title that you should know. In my case, I found when I trace the title goes to the year 1983. I have gone audit for the year ending 2019. It's a credit audit. 2019, I have gone. When I trace the title, it has gone to the year 1983. In that, it's a limited company. It is a spinning mill. It's a limited company. It is a spinning mill. When I went to the tracing of the title, the company has purchased the property in the year 1983 from a firm. That is from the same partners or the same directors, shareholders are there in the firm. They purchased the property. The company has purchased a property from the firm. One. The thing is, as per the sanction letter, I noticed that the company has got a extent of 6.19 acres. The sanction letter says the company has got a 6.19, valuation 6.19, legal 6.19 acres, and factory license 6.19, pollution board 6.19, all revenue records. They say that the company has got 6.19. When I trace the title in the year 1983, when I go through the documentation, that is title deed of the company, I found that the company has got only 3.19. So this 3.19 for easy explanation I have taken, but it is less than that. It is less than that. So 3.19 acres of land available. So as per the sanction letter, it is 6.19. But when I trace the title, I found that the company has got only 3.19 acres. 3.19 acres. That means there are no documents for 3 acres. But the firm has got 6.19. The firm has got 6.19, but when they transfer the property to this company, they transfer only 3.19 and not 6.19. So based on 6.19, every loan is being sanctioned. The loan amount sanctioned is 14.40 crores. Then for this, I have done a working of more than one and a half days because I want to comment. I have found out some mistakes, so I want to confirm whether my finding is correct or not. I waited. Then after that, I discussed this with the branch manager, and the branch manager in turn, he called the advocate and the valuer. So this case discussion is applicable only for this particular case. I am just sharing my experience. I am not commenting against any advocate. I am not commenting against any valuer. They are all good. The mistake applies only for this case and not for all cases. It is only an experience sharing. Here, he called the advocate and he called the valuer manager. Then they had discussion, and the advocate, on seeing all the findings of mine, he said that, sorry, sir, we have done the mistake. Sorry, sir, I have done the mistake. It is only 3.19 acres and not 6.19 acres. And based on the advocate opinion, based on the valuation report, the bank has sanctioned the loan based on the 6.19 acres. So that means the loan amount is wrong because the base is wrong. Now, so yes, both of them have accepted that there was a mistake. This I proved as a chartered accountant. I proved even in one bank where I have gone concurrent audit. They say that, sir, you have got no right to comment against the advocate, or you have got no right to comment against the valuer. I said, I have not commented. I have given my observation. It is left to the manager to take the decision. I have not commented against the advocate. I never say that advocate is wrong. I said that the advocate has not seen this. You should have seen this. So that's all. I never said that legal opinion is wrong. So in this case, 6.19, then the manager asked me, sir, what is the remedy? Then I asked him to do the survey of the property. I asked him to do the survey of the property. Let us take this is 6.19. Let us take this is 6.19 acres. This is 6.19 acres of land. And that 3.19 acres, it is located in the middle of the property. It is located in the middle of the property. Okay. Let us take it is 6.19. And let us take it is 6.19 and the property is situated in the middle of this land. That means it is called as landlocked property. Even I can tell with another example because it's clearly it is there now because of the camera. Na? So let us take this is 6.19. This entire amount is 6.19. That this is the this one. Na? This is our emblem. Okay, some camera. Okay. Okay. This one is 3.19. 3.19. That is this the land is situated here. That is there is no passage to the property. Then if there is no passage to the property, then that property value has to be taken as 0. You cannot go in helicopter and land into the property. So I proved that there is no value to the property. As per the NPA norms, as per the IRAC norms, if there is no property, no value to the property, you can treat it as loss asset. For that, there is a classification. Here, there is this in this slide, you can easily understand erosion in property value. Just here, I'll tell. If the value is below 50% and 10 after availing the loan, suddenly due to some other reason, the value of the property has come below 50% and up to 10%, though the accounts are standard, you can directly classify that account as doubtful 3. That's doubtful 3. That means you have to make 100% provision. If the value falls below 10%, then you can treat it as loss asset. You can treat it as loss asset. This is a concept. In my case, I have, since the value of the property has been eroded and it has come to 0, I have classified the entire 14.40 crores into loss asset. And in one of my another cases, I've helped my client to get a loan amount of 85 lakhs and the property values say it will be around 1.20 crores. The property value is 1.20 crores, availed loan is 85 lakhs. After 2 years, the railway department acquired the land for the railway project. When they acquired the railway project, it's a poultry shed, it's a poultry unit. The railway track goes in the middle of the poultry shed. That means the land is being divided into 2 parts. It's being divided into 2 parts. One is in the front side, one is on the back side. The front side land has got some value. For the back side land, they have to travel 4 kilometers to reach this land. So the manager has valued the property at say 7 lakhs. He has valued only 7 lakhs, which is less than the 10%. Originally, it was valued at 1.20 crores. He has valued only 7 lakhs, which is less than the which is less than 10%. So he has taken the asset, that is loan amount, as loss asset. So this point you have to bear in mind. Is there any erosion in property value? And any valuation you have to done for, once in 3 years, you have to do the valuation of the property. The valuation of property should be done by another engineer and not by the same engineer. Suppose if A has done the valuation today, after they revalue the property, the only B has to revalue the property and not the same A. This is also another audit objection that you have to do at the time of audit. And particularly if you are a concerned auditor, you have to take care of this point. So now in this case, the property value is 40 lakhs. Suddenly the property value has gone to 48 lakhs. That is the erosion in property value is 45%. So you can classify that asset as B3. In case, for example, if the property value is 2 lakhs, that is only it has got 5 lakhs value, 5% value is there, then you can treat that as loss asset. This concept is called as erosion in property value. If you got any doubt with reference to erosion in property value, you can ask me because it's a very, very important thing. Erosion in property value. Number 6, government guaranteed advances. Government guaranteed advances. Central government, if it gives guarantee to the loan, it cannot treat it as NPA. If the guarantee is given by state government, all the NPA norms are applicable. This point you have to bear in mind. With reference to government guaranteed advances, central government guarantee is given, NPA is not there. And if the guarantee is given by the state government, all the NPA norms are applicable. Do you have any doubt with reference to aeration in property value and release? If you got any doubt, I'll stop here. I'll explain to you, then go there. Unrealized interest, three types of interest is there. Both years you have got unrealized. Second year, in second method, there is a deficit in last year. Current year you have got a surplus. You can adjust and not vice versa. Erosion in property value, the value of the property has eroded, and if it falls between 50% to 10%, you can directly take the standard asset to doubtful three. And if the erosion in property value is less than 10%, you can directly take to losses. Any doubts, sir, for this? And I think members are tired on hearing this. But I'm fresh, don't worry at all. So regarding government guaranteed advances, central government guaranteed advance, no NPA, and thank you, Jayabal sir. And state government guarantees, all the NPA norms are applicable. I'm just touching the basic. Thing. This point you have to remember. Next one is, that is, in district, any loan, if it is sanctioned through district industrial center, other than the PMRY, other than the central government schemes, say in Tamil Nadu, you can get UYEGP loan as well as needs loan. All are coming and they are guaranteed by the government, state government. All the norms of NPA applicable. But if in case of PMRY, Prime Minister Employment Generation Program, PMEGP, Prime Minister Employment Generation Program, in that the central government is giving guarantee, you need not worry about the NPA calculation. So all the government guaranteed advances. Next one is consortium advances and multiple advances. Yesterday we have seen the consortium advances and multiple advances. In consortium advances, 4 banks, they jointly lend to a particular project. And in case one of the bank, they classify the account as NPA, that is one bank, one participating member or member participating bank, if account has become NPA, it will not affect other banks, NPA. Affect other bank. So this account has to be treated as standard. Other banks, they have to treat it as standard. For in case one account has become NPA, one bank account has become NPA in consortium, it will not affect the other bank's classification. The same concept is with the multiple banking also. If one account has become NPA, it will not affect the other bank's classification as NPA. This is one. And another concept is sublimit. That is, there one bank has, a limit of 1,000 crores is there. It has been divided and shared to some 3 branches. So when you want to arrive at the NPA with reference to sublimit, you have to club all the sublimit and arrive at the NPA. Suppose at Chennai you have got the loan, main loan is there at Chennai, and one loan they parked at Hyderabad, one loan they parked at Delhi, and one loan at Calcutta. You have to call all the 3 accounts, and the auditor who is going for the Chennai audit, he has to take care of the NPA classification. So consortium, each and every bank's decision is final, and sublimit, you have to club all the limit and arrive at the NPA. Is it clear, sir? This is with reference to consortium and sublimit. Advance against term deposit, NSC, KVP, Indira Vakash Patra, NPA provisions are not applicable. Advance against the bank's term deposit, National Savings Certificate, Kishan Vikas Patra, Indira Vakash Patra, because NSC, KVP, IVPs are central government guarantees, no NPA applicable. Advance against the bank term deposit, it is the bank owns deposit, so NPA provisions are not applicable. So when you see any loan sanctioned against the term loan, NSC, KVP, IVP, don't worry at all. You don't do any NPA working. Everything is correct. You have to treat it as standard only. And here, agricultural advances affected by natural calamities. Here, you have to be very, very careful. In case if there is any flood or cyclone, that is there in Chennai. The bank as a whole, they are issuing the circular. There's a flood in Chennai or there's a cyclone in Chennai. We are postponing the agricultural due date to some other date. The branch at Delhi, they are giving effect to this. So in that circular, they clearly specifically mentioned to which area this circular is applicable, to which area this circular is applicable. But the people, even the bankers, what they do, they apply this for the entire India. That is not there. So whenever the bankers, they say that, sir, we have got a natural calamity circular and we have given effect, that is totally wrong. In that natural calamity circular, there should be a specific sanction that this circular is applicable only for this. This point you have to see. Next point is, okay, this I'll just skip it. So here, takeout finance. So we'll go to takeout finance. It is applicable for the long-term project. And once the institution has taken over the, suppose one loan is there at Bank of Baroda. The entire loan has become NPA according to the Bank of Baroda classification. Suddenly IOB is there. IOB has gone to Bank of Baroda and the request of the borrower. They have taken over the loan from Bank of Baroda. So it's a long-term project, long-term infrastructure project. When they take over the loan from the Bank of Baroda, the same status of Bank of Baroda continues for the IOB also. You can, for the IOB, you cannot take it as standard. It is the rule applicable for the takeover. Only for the long-term infrastructure projects, you can find if you are going for a very big unit, very big bank, you will get this type of financing. It's a takeout finance. In case the Bank of Baroda account has become NPA, if it is the loan is being taken over by IOB, for example, and that the same status of Bank of Baroda, it has to be continued for the IOB also. You cannot take it as the standard. Last point, advance to staff, normal rules of applicable. NPA rules are applicable. Last point, if any advance is there, any advance is there to the staff account has to be treated as NPA. Here, one can say that, sir, it is a staff loan. That is why we are not classified as NPA. No, don't accept. One. You have to see that staff is still in service. Staff is still alive. These 2 points that you have to see. Suppose, yes, nowadays what they do, now they join one bank. After availing the loan, they left this branch and they go to some other bank. One. And sometimes they will, for the staff advance, they will be getting some concession interest. With reference to staff advance, I will tell one thing. First, they adjust the principal, then only they go to the interest. Normally, for others, they adjust the interest, then only they are going to the principal. But with reference to staff, first they adjust the principal, then only they are going to the interest. If he is not in the payroll, then the rule you have to change. So for the NPA calculation with reference to advance to staff, normal rules are applicable. Normal rules are applicable. Now I'm moving to the next portion, very interesting portion of agricultural advances. So far I have covered non-agricultural advances, term loan, CC and other important highlights. Now I am going for the agricultural advances NPA, wherein lot of members, they have got a confusion to arrive at NPA for the agricultural advances. There are two things that you have to remember. One is direct agriculture, second one is indirect agriculture. In that direct agriculture, one second. In that direct agriculture, what are the activities that are directly related to the land? That is crop. That comes under the category of direct agriculture. And indirect agriculture, you can get the same thing from the allied activities. Crop loan and non-crop loan. Normally, this non-crop loan and indirect agriculture, you have to do the NPA calculation, which is applicable for the non-agricultural advances. See, only for crop loan, you have to form the NPA as per the following. I'll explain what I'm going to explain. That is applicable only for the crop loan and not for any non-crop loan and indirect agricultural loans. This point you have to bear in mind. Suppose if there is a fishery, thus comes under the category of NPA. Fishery is that is you have to calculate where it is coming under the category of indirect agricultural loans. Normal NPA rules are applicable. Non-crop loan, same thing. Fisheries, tractors, everything you have to calculate as the normal agricultural advances. This is according to me. And if the banks, they specifically say that, no, you have to follow this, and there should be, if there is any circular issued by the head office, then you have to do the working as per the bank's head office. Now, another thing is, there are two types of crop season. One is short-term crop season, short-term crop, and long-term crop. Short-term crop means which is less than 1 year. I need only 10 minutes. You can easily understand how to do the NPA classification with reference to agriculture. Crop season, which is less than 1 year, that is called as short-term crop. The crop season, which is above 1 year, that is called as long-term crop. And what is going to be a crop season? It's a crop period plus harvest period plus marketing. Crop period plus harvest period and marketing period, that is called as crop season. Now I am going for the NPA classification with reference to short-term crop. With reference to short-term crop, here you see that crop season of short-term, that is this crop season is clearly mentioned in the sanction letter. This clearly mentioned in the sanction letter. The due date is also clearly mentioned in the sanction letter. With reference to NPA for short term, that is with reference to identification of due date for the short term crop, you have to add two crop season which comes after the due date, If in this example, first example, 22-3-16 is the crop season. 22-3-16 to 18-10-16 is the crop season. And as per the sanction letter, it is 31-10-16 is the due date. So you have to add two crop season which comes after the due date. That is 22-3-17 to 18-10-17, 22-3-18 to 18-10-18. So you have to pay on or before 18-10-2018. And that means the due amount of 31-10-16 has to be paid on or before 18-10-18. Otherwise, this account will become NPA on 19-10-18. If you understand this, all NPA classification with reference to agriculture is over. I'll go slowly. The crop season is clearly mentioned in the sanction letter. If it is not mentioned, you ask the manager to commit. And the due date is also clearly mentioned in the sanction letter. One. And you have to add two crop season with reference to short-term crop. Okay. So the crop season which comes after the due date. The crop season which comes after the due date. So it comes to 22-3-17 to 18-10-17, 22-3-18 to 18-10-18. So that means the due amount of 31-10-8-16 has to be paid on or before 18-10-18. Otherwise, that account will become NPA on 19-10-2018. Is that clear, sir? Just, I need only 2 minutes of your attention. That's all. So, even our institute has got some 37 exercises in the guidance note. You can easily arrive at the due date. Because this is where we are lacking, including me. We struggle to identify the NPA classification because managers, they tell a lot of stories. Don't worry at all. Don't hear the manager. Is it clear, sir? And the second exercise is 10-11-17 to 5-6-18, which is less than 1 year. The due date fixed is 25-6-18. You have to add from 25, 16, 18 to crop season, which comes after the due date. It comes to 5, 6, 20. That is the amount which is due on 25, 6, 18 should be paid on or before, 5, 6, 20. If it is not paid, then that account has to be treated as NPA on 6, 6, 20. Is it clear, sir? I'll wait. Everyone has to confirm, yes, I'm clear. Because agricultural advance is nothing. NPA with reference to agricultural advance is nothing. Badis sir said yes, and Jabalan sir said yes, and other friends. So with reference to short-term crop, from the due date, add to crop season, the crop season which comes after the due date. And if it is not paid within that date, that is after 2 crop season, then that the next date is the NPA date. Is it clear, sir? I think only 2 friends have confirmed. Now I'm moving, is it clear, sir? Now I'm moving to the long-term crop. Same concept, long-term crop. Instead of here, 5818 to 6919. 5818 to 6919. It is more than 1 year. So you have to treat it as long-term crop. And the due date is 5919. This due date is clearly mentioned in the sanction letter. Add 1 crop season. See, with reference to short-term crop, you have to add 2 crop season. With reference to long-term, you have to add only 1 crop season. The crop season which comes after the due date. The crop season which comes after the due date. That means it ends on 6/9/2019. That is, a loan which is due on 15/9/19 has to be paid on or before 6/9/2021. Otherwise, this NPA account, it will become NPA on 7/9/21. This is with reference to long term. In short term, you have to add 2 crop season from the due date. And long term, you have to add 1 crop season after the due date. And the crop season which comes after the due date, you have to consider. Is it clear, sir? Any doubts? I think members are silent, friends are silent. I think was doing this, no doubt for me. Yeah, thank you, Jaipal sir and Badish, clear. Then Vijay sir, because I need that after the end, say I'm going to, close the session with Baba Mutra. Baba Mutra, this a new technique that I have adopted in identifying the NPA. And any doubt for this? I think Sarvan Kumar sir is there, and Sangesh sir is there. Okay. Any doubt? You are welcome, sir. You can call. Yeah, Shamir sir. Thank you. And if you got any doubt, don't hesitate to call me at any time, even after the session also. And I'll do one thing. I'll try to send the important working of this to your mail after the end of tomorrow. I'll try to send to you so that will be useful to you while you go to the bank audit. That also tomorrow I'll try to send because I will prepare on my own and send to you in a separate Word format I'll send. So you go to the bank, whenever you are going to the bank, you carry that will be useful to you. So, okay, I'm going to explain the next very important technique. It's a raw technique. Nowhere you can find this technique. This is a technique that I have introduced in my audit. In my audit, I have introduced the same thing. I have introduced the same thing here. Interest we have discussed. And before going to the presentation, I want to say about the provisioning norms. Provisioning norms, that is with reference to standard asset. Previously, there was no provisioning. Now, it's a standard asset. Also, you have to make the provisioning. For SMA category, it is 0.25. Commercial, residential, if it is there. The account, though the account is standard, you have to give the provision of 0.75%. If it is commercial, 1%. And medium enterprises others, it is 0.4%. Secured portion should not be considered. Only for the secured, for the unsecured portion, don't worry at all. The bank, that is as a standard as a whole, for the entire thing, whether it's a secured or unsecured, we have to make the provision. And with reference to substandard, without considering ECGC cover, substandard, 15% you have to consider for the secured portion and 25% for the unsecured portion. And with reference to infrastructure, for the unsecured portion, you have to take 20%. This also tomorrow I will circulate. And with reference to doubtful, up to 1 year, it is 25%. For the unsecured portion, you have to give 100%. That means a clear indication that for the unsecured portion, if there is any loan, if you identify that account as NPA, you have to make a provision of 100%. And if it is a secured portion, you have to make a provision of 25%. And 1 to 3 years, it is 40%. It is more than 3 years, it is 100%. And with reference to any doubtful assets which are unsecured, you have to make a 100% provision. And in case of loss asset, you have to again make the 100% provision on the outstanding balance. It is not on the sanction. This point you have to remember. You have to take on the outstanding balance and not on the sanction limit. So, okay, this chart also I will share to you tomorrow. And it's only, but normally this type of provisions, the head office, they are taking care. And now, I'm going to tell about the new method of Baba Mutra. So far, nobody has touched this concept, and it's a raw technique. And even in no one has introduced this technique. Even a layman, without knowing the principle of NPA, they can easily identify one account as NPA, but it is only a raw method. It is not a foolproof method. Here, you have to take left fingers and right fingers. This one is called as date of loan and sanction of due date of the loan. Before that, you have to ask for the loan trial balance. You have to ask for the loan trial balance. Easy identification is a manual mode. You have to ask for the loan trial balance, then apply Baba Mutra. You have to ask for the loan trial balance. When they generate the statement may run into some 700 pages or 800 pages. When they run the system, you ask them to exclude the jewel loan and ask the branch to produce the loan trial balance. So in that trial balance, you can find all the figures from date of opening the branch till today, and you put your left hand finger on the date of loan and due date of the loan. Just you pull it, and if there is any that is due date is over, and you have to see whether there is any corresponding outstanding is there. If there is any corresponding outstanding, and you have to see whether what the branch has done, whether they put it in standard or substandard or doubtful assets. So based on the status, you can identify. So date of loan and due date of the loan, and if the due date exceeded the present, the due date is over, then go to the outstanding balance column and see whether there is any outstanding and see whether that outstanding has been classified as NPA or not. If it is not there, then you have to identify that account as NPA. Then you have to adopt all the rules which we have discussed so far. And go to the right hand. Loan amount sanctioned, outstanding amount. Loan amount sanctioned and outstanding amount. When you pull it, and in case the outstanding amount exceeds the loan amount, then that account has to be treated as NPA. It is very, very simple. The outstanding should be always below the sanction limit. In case if the outstanding exceeds the sanction limit, absolutely that account will be treated as NPA. I cannot say that it is a foolproof technique. It's only a raw technique. For easy identification, you can do it. Left hand, date of sanction, due date of the sanction. Right hand, loan amount sanction and outstanding amount. You have to do the exercise. This method is called as Baba Mutra. It is only a raw technique. I cannot vouch that this is a confirmed technique. Only for easy understanding, you can do it. And this exercise you can give to your staff. You can do it. I am stopping the presentation of almost I covered all the important points of NPA here, and I'm stopping the today's presentation. And I want to touch some few of the NPA games. So I'm going to touch a few of the NPA games. How the bankers they hide the eyes of the chartered accountants to get the signature, and just it will take only 5 minutes to complete it. Change the due date by the bank. They alter the master records. First thing, they alter the master records, they change the due date the next year. So the system says it is standard. So this you have to see whether the branch has changed the due date or not. One. And for this, refer the sanction letter, work out the correct dues and arrive at the dues. And showing the, okay, this is not required. And giving loan to close NPA loan. The branches, they sanction one loan to close the NPA loan. Yes, you have to convert this new loan as the NPA with the original status of the NPA loan. So no one is permitted to close the NPA loan out of the by way of sanctioning the new loan. And the next method they adopted is they passed dummy entries. That is, your money is being given credit to the loan account. Thereby, they avoid the NPA because the system calculates only the amount given credit into the account. So when they pass the dummy entry, the system takes care of this dummy entry only. So you have to remove it. That is another technique that the bankers they adopt. And next method is regional office message. The managers they whenever you identify one account as NPA, they say that, sir, we have got a confirmation from the regional office that we are correct. So if they show the regional office message or any fax message, you have to be very, very careful whether those messages are genuine or not. There are a lot of incidences. These type of messages have been fabricated from the regional office and they are sending to you. Don't rely on the regional office message. If the manager, they produce those regional office message during the audit, and if at all they produce this type of messages, you have to confirm whether those regional office messages are genuine or not. It is up to you to decide, but by way of showing the regional office message also, they will do it. So they say that, sir, regional office. So already we have seen that within 180 days, the loan has to be renewed. Otherwise, that account has to be treated as NPA. Suddenly, this is last 1.5 years, they have not renewed. Suddenly, the manager producer, sir, regional office has renewed the message, has renewed the loan. If that is the case, you have to see what is the credit committee report, what is the credit committee date of passing. You have to get the minute copy passed at the credit committee. Managers, he will not show. That means it's a dummy entry. By way of showing the dummy regional office message, they try to prove that it is a regular account. Don't rely on the regional office message. If the manager produces the same during the audit. Next one is allotting two SIF number for one. See, it is a per borrower concept. So to avoid NPA, what the bankers they do, they allot two SIF number, two different numbers. So only one SIF you will get the NPA, and another SIF it will be eliminated. Nowadays it is not possible. Previously it was there. Bankers they allot two SIF number. As they link the same thing to PAN and Aadhaar, this concept is being removed, but it will also be there. And next concept is temporary extension. They say that we have temporarily extended. Thereby, you are not supposed to classify the account. Yes, we will not classify this temporary extension or ad hoc extension should be part of this 180 days. It should not go beyond 180 days, but they are going and they are temporarily extended 2 months, 2 months, 2 months. Even beyond that 180 days also, you are permitted to consider only up to 180 days. Beyond that, you have to treat it as NPA. Next one is subsidy adjustment that I have already said, adjusting the subsidy to the loan account. In front-end subsidy, this I have already explained in my other presentation. Other points of NPA is title deed dispute if it is there, and if the title is not, if it is very difficult to prove the title deed, you can classify that asset as D3 or loss asset. Based on the erosion in property value, you can do it. Next concept is, in case if there is no DPN, it can be treated as loss asset because you cannot enforce this before court of law. Next one is holiday period and agricultural advances. There is no holiday period for the agricultural advances. Manager, they used to say that, so that is a holiday period, but everything, it depends on the sanction letter. Please go and see the sanction letter, then only you have to take the decision. Next one is business is closure but shown as running. So at the time of sanction of the loan, business is there, but after the receipt of the loan, they would have diverted the funds to some other purpose, but business is closed. But the bank, but the party, they are showing that the business is still running, and it is also classified under the category of called quick mortality. So you have to treat it as NPA. That is also another point. And next one is, we already discussed installment of the guarantor will not make the account as NPA. Borrower's NPA will not affect the installment guarantor as NPA. Next one is auction by the government. It is suppose previously the first right goes to the government, then only to the bankers. After the Supreme Court verdict in particular case, I don't remember the case, they say that if the bankers, they have sanctioned the loan, the bankers have got the first right, but the government, they auction the property. So if that is the case, if that auction has to be treated as invalid. So this point you have to remember, and if they did the auction, you have to recall it. And if there is any NPA, only the bankers have got the right to do the auction and not the government. Willful defaulters, normally you have to classify as NPA and fraudulent transactions, blacklisted customers, stock statement submission we already discussed. And last year also, this is another important thing. You have to ask for the last year NPA statement and this year NPA statement, you compare it. That means in the last year, if there is a substandard, the branch has to classify as doubtful this year. In some cases, they remove this, they remove this NPA, that is, they remove this current year figure and they treat it as standard. So you have to compare it. If there is any downgrading possible, they have to do the downgrading. And sometimes the banks, they omit this. And if they omit the entry, you have to see whether there is a recovery in the account also. If there is any recovery, and if it is upgraded, they have to pay all the dues as on date. So last year NPA, whether it has been reversed. So last year substandard means this year it should be D1. And last year substandard, this year statement also they put substandard. If that is the case, you have to give the same thing in MOC. And cash entries in NPA, you have to see the genuine source of the cash entries. And education loans, you have to see whether all the interests have been paid up to the education period. And sometimes the sanction letter says that all the interests have to be clubbed and added to the principal, and from that they are fixing the loan repayment. Next one is schedule NPA wrongly entered, and SBOD I already explained. Housing loan, according to my experience, holiday period interest, the system will never take care. So you have to be very, very careful. And forex loans, you have sent the bill for collection. If it is not realized, then if it goes beyond that 365 days, you can classify that account as NPA. But everything depends on the sanction letter given by the bankers. And account transfer to collection agent, sometimes they are transferring the money to the recovery agency to do the collection. And the bank, they say that since the money we have handed over, that is account we have handed to the collection account, it will not be treated as NPA. No, that is wrong. It is only the recovery work they have given to the recovery agents and not the account. If they are selling to ARC, okay. And if they transfer the money, transfer the account towards collection, the property belongs only to the bank. There also they started to hide. And sometimes in some banks, what they do, they transfer the amount from one branch to another to avoid NPA. So they transfer what is the NPA cutoff date? It is 11/23. What they do in the month of January, they transfer the account from one branch to another branch. So if the account is with the same branch, it will be treated as NPA. To avoid NPA, what they do, they transfer the account from this branch to another branch. And another branch say that, sir, we have received the advance statement only this year. That is after cutoff data 11/23. So they try to avoid NPA for this branch as well as to the new branch. And even if at the new branch also, if the account has become NPA, what they do, they transfer from one state to another. This I have found out in my audit career. So transfer from one branch to another branch to avoid NPA, and sometimes they transfer from one state to another state also. If so, you have to see whether even though the loans have come after 1/1/23, that is after cutoff date, you have to see whether it's a sanction or transfer. If it is a transfer, you have to go to the base work. And this is what I want to say about the NPA today. Now I am going to stop the NPA working, and NPA pressure that you are man on the spot and want to make a request, don't deal to any pressure given by the any branch manager, regional office and zonal office or head office. Even sometimes customer will also come and make a request. Sometimes they will come and threaten you also. Try to report without any hesitation. There are a lot of case studies. Okay, thank you very much for the NPA presentation now. And as almost I have covered all the points of NPA. And if you got any doubt, you are welcome, and you can send to my mail ID even during the bank audit also. If you find anything, edit doubt also, you can do it. And also I'll try to send the working sheets to you for your easy reference. And I'm stopping the presentation now. And I want to say that it is say Nandri Vanakam, because I'm stopping the presentation. And any doubt, if you got, you are welcome, sir. And morning session, it is over 8 to 11. I have covered almost all the important highlights of NPA. And I want to tell one thing: any doubt, you are welcome. And we will assemble back by 2:30 in the afternoon. I am going to start with the bank frauds. Just teach you how to do fraud. First thing, you should know all frauds, but then only you will be in a position to find the fraud. Afternoon sessions are it's going to be very, very interesting. I am going to touch the bank frauds and, if possible, some other area of banking. And we will complete after 7 o'clock also. Remaining thing, if anything is left, we will complete in the evening. Nandri Vanakkam for the presentation which I had now.